The committee will come to order.
Is it matching? Is it too much? Four people on. All right.
Without objection, the chair is authorized to declare recess of the committee at any point pursuant, excuse me, the committee will come to order. Pursuant to Committee Rule 3 and House Rule 11, the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. We will be collecting and distributing amendments electronically as well as physically to ensure all members have access to relevant documents in this hybrid format. All amendments must be submitted to the committee email provided in the meeting notice. The amendment will then be distributed to all members in the room and all members on the platform through an email list that has been developed in advance in coordination with the ranking member. As is the chair's practice, amendments that are pre-filed will be given priority consideration. Without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. I now recognize myself for 5 minutes for opening remarks. Today, this committee will mark up 6 bills, half of which have bipartisan support. After the stress the pandemic has placed on our economy, Democrats are responding with legislative solutions and working across the aisle to provide a safety net for consumers and investors to ensure their life savings are protected from predatory or bad market practices. As the pandemic took jobs and loved ones, communities across this country look to investing as an answer to rebuild their livelihood. Simultaneously, special purpose companies, or SPACs, have proliferated, putting retail investors at risk. SPACs are shell companies with no operations that can go public and avoid key IPO requirements. While SPACs have been good to SPAC sponsors, hedge funds, and investment banks, retail investors have been exposed to real risk. Committee Democrats will be marking up a bill led by Representative Michael Nicholas, H.R. 5910, Holding SPACs Accountable Act of 2021, to level the playing field between SPACs and other companies that want to go public by subjecting these shell companies to liability for making false or misleading forward-looking amendments. Additionally, this committee will also mark up a bill led by Representative Brad Sherman, H.R. 5913, the Protecting Investors from Excessive SPAC Fees Act of 2021, to require that SPACs make detailed and timely disclosures to investors about the risk associated with investing in the shell company. Our work to protect investors doesn't stop at SPACs. This committee will also mark up a bill by Representative Josh Gottheimer, H.R. 5914, the Empowering States to Protect Seniors from Bad Actors Act, to create a grant program within the Securities and Exchange Commission to bolster the ability of state securities watchdogs to protect seniors and their retirement savings. We will also consider a bill by Representative Bill Foster, H.R. 2620, the Investor Choice Act of 2021, to correct longstanding and deeply unfair practices of forcing customers to resolve their claims through arbitration instead of as a part of a class action. This committee will continue to focus on protecting retail investors as we recover from the pandemic. Economic opportunity and the prosperity of all hardworking people in America is a top priority. So this committee will consider a bill by Representative Joyce Beatty, H.R. 5911, the Fair Hiring in Banking Act, to reduce barriers and expand employment opportunities for justice-involved individuals with minor criminal offenses. These individuals should have an equal opportunity to get a job at a bank or credit union, and this bill will help ensure that they do. We will also consider H.R. 2311, the Credit Union Governance Modernization Act, a bipartisan bill sponsored by Representatives Tom Emmer and Ed Perlmutter. The bill would streamline efforts in the rare circumstance a credit union may seek to expel a member whose behavior poses a serious threat to other members and staff or disrupts operations while ensuring fairness and due process for the member in question. As we recover from the pandemic, we must continue to take a closer look at our financial system to ensure that retail investors and consumers are protected and that the system provides equal opportunities for all. At a time when communities are desperate to build back and recover from the loss of the past year, this committee will continue to advance legislation like that we are considering today to expand opportunities, promote fair and competitive markets, and ensure working people can safely build up their nest egg. So I would like to thank the members for their work on this important bill, all of these bills, and look forward to passing them through committee. I now recognize the ranking member, Mr. McHenry, for 5 minutes for any opening remarks he may have.
Well, thank you, Madam Chair. I'll start by thanking the Chair for including Congressman Emmer's legislation to reform our credit unions in today's markup. There's also a few other bright spots of bipartisanship, and Congressman Gottheimer's bill to protect seniors from bad actors is one. Congresswoman Beatty's legislation to codify some of the previous administration's work to expand employment opportunities for Americans with past minor offenses. I think this is a positive and in stark contrast to the usual Democrats' go-it-alone approach for this Congress. However, I can't help but wonder, why is there nothing in today's markup to help Americans who are struggling to make ends meet? Madam Chair, in October, the Consumer Price Index, or CPI, a key inflation index, hit a 30-year high. CPI rose 6.2% in October compared with a year ago. That is the largest annual increase in 30 years. So what does this stat actually mean to American families? It means that it costs you more to fill up your tank. It costs you more to put food on your table. It means that your paycheck is worth less. I know my Democrat colleagues don't want to hear anything from Republicans about inflation. So here's what CNBC had to say last week. Quote, "What looks like a big jump in workers' wages during October turned into just another gut punch after accounting for inflation." The article goes on to say, quote, "Real average hourly earnings when accounting for inflation actually decreased by 0.5% for the month. So an apparent solid paycheck increase actually turned into a decrease and another setback for workers still struggling to shake off the effects of the COVID pandemic," end quote. Translation, rising prices are outpacing wages. That doesn't sound like a, quote, high-class problem, as some have said. It sounds like Americans are living paycheck to paycheck are in trouble. So what is my Democrat colleagues, what is their response? Let's pile on even more debt, even more government spending, and do it in this reconciliation bill that will make rising prices worse and saddle our children and grandchildren with more debt. Or let's enact tax policies that benefit our wealthiest base in blue states and the biggest cities in America, the most prosperous people in America. I'm sure this will make some folks in California and New York very, very, very happy. The bad news is for the rest of the country who are going to foot the bill. And of course, then we have this markup, which is a grab bag of bills that to narrow down our capital markets. Those are the three partisan bills that are being presented today. To say my Democrat colleagues are out of touch with the needs of the American people is an understatement. So what should we be discussing today instead? How about finding ways to help more Americans participate in our capital markets to build their savings? Those people that have savings in the market today are better off than they were 2 years ago. They're better off than they were a year ago. That's the only way to match this inflation juggernaut unleashed by Democrats is to have savings in the market. We should broaden our capital markets, not narrow them. Or we could finally discuss a real solution for renters who are struggling due to the Biden administration's gross mismanagement of the Emergency Rental Assistance Program. Or we could discuss ways to get more Americans safely back to work. Unfortunately, none of the, quote, people's business, as some want to call it, seems to actually be evident. And while we're here for another marathon markup, President Biden continues to take his time on nominating a Federal Reserve chair. This is the latest in history that a president has nominated a Fed chair. And this new milestone couldn't come at a worse time. Our economic recovery is fragile. The stakes are very real. And this administration has now got a historical marker that this is the latest nomination to the Federal Reserve ever. And as I've mentioned, rising prices are outpacing wages, and we need certainty that Chairman Powell can continue his work to steer our economy in the right direction and to help us through this post-COVID economy and get us normalized. But this is all indicative, quite frankly, of a larger discussion about the Democrats' inability to govern. And we can continue that debate today. So with that, Chair, I yield back.
Thank you very much. Pursuant to notice, I now call up H.R. 5911, the Fair Hiring in Banking Act. The clerk will report the bill.
H.R. 5911, a bill to amend the Federal Deposit Insurance Act and the Federal Credit Union Act to expand.
Without objection, the first reading of H.R. 5911 is dispensed with. The gentlewoman from Ohio, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 5911 offered by Mrs. Beatty of Ohio. Strike all after the enactment
Without
clause.
objection, the amendment will be considered as read. I now recognize Mrs. Beatty to explain the amendment in the nature of a substitute.
Thank you, Madam Chair. My bill, the Fair Housing in Banking Act, would make several changes to the Federal Deposit Insurance Act and the Federal Credit Union Act to expand employment opportunities at federally insured financial institutions for individuals with criminal records by reducing barriers, streamlining the waiver process, and giving financial institutions more flexibility in their hiring practice. As we learned from the Diversity and Inclusion Subcommittee hearing held just earlier this fall, justice-involved individuals face specific challenges in accessing opportunities in the job market after they have served and paid their debt to society. Likewise, business and potential employers face a regulatory structure that de-incentivizes taking the time to hire these individuals, and we need to re-examine these barriers where appropriate to help reach full employment. The United States of America has the largest population of incarcerated persons in the world, with 2.1 million Americans in prison. 1 in 3 American adults have been arrested, and 78 million Americans have a criminal record. These are, remember, our friends, our neighbors, and even family members. Currently, there are 10.4 million job openings in the United States economy, and unfortunately, justice-involved individuals are too often shut out from these opportunities. That is why this bill, Madam Chair, is so important. Specifically, this bill would drastically reduce the current lifetime ban for individuals who have committed certain minor crimes from working at a federally insured federal institution with a more lenient and more effective 7-year ban. Thanks to the research and numerous studies, we know that a person who has been convicted of a felony is no more likely to be arrested for a new offense than other members of the general population after 7 years. In fact, the Equal Employment Opportunity Commission cites this research in their enforcement guide for hiring persons with criminal records. This bill also codifies some of the recent changes the FDIC has made in their recent rulemaking regarding how crimes that have been expunged and sealed are treated and thresholds for what counts as a small dollar simple theft. Young boy, 19 or 20 years old, steals a couple pair of gym shoes. However, they are at the felony level. Years later, he's lived a productive life, done everything. He would fall in this category of possibly not being employed. The bill would also increase the exemptions from the waiver process for individuals under the age of 21 and expand what constitute de minimis crimes such as using a fake ID when underage, trespass, or even jumping a turnstile at a train station. Overall, this bill would reduce barriers to unemployment for individuals who have served their time and give federally insured financial institutions the flexibility to make their own decisions about who to hire. Let me just say, I would like to thank my fellow co-sponsor, Mr. Ashen Kloss, for his support, as well as Madam Chair Waters, Ranking Member McHenry, and Ranking Member of the D&I Subcommittee, Congresswoman Wagner, for their work on this legislation. I would also like to submit for the record, Madam Chair, letters of support for this legislation from the National Bankers Association, the Credit Union, National Association of Public Citizens, Bank Policy Institute, Financial Services Forum, National Association of Federally Insured Credit Unions, and the United States Chamber of Commerce Center for Capital Markets. I would urge my colleagues to support this bill. And
Without
I yield
objection,
back.
such is the order. Thank you. The gentlewoman from Ohio, Ms. Beatty, has an amendment at the desk. We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 5911, offered by Mrs. Beatty of Ohio. Page 9, beginning on line 24, strike include.
Without objection, the amendment will be considered as read. I now recognize Mrs. Beatty to explain her amendment.
Thank you, Madam Chair. This is a manager's amendment, and it makes a small technical correction to the bill and strikes some of the language in the definition of crime of dishonesty, which is redundant because it's already reflected in the current FDIC policy. Let me also say, in an effort to not interfere with that policy and or require the FDIC to issue new regulations on that issue, I respectfully ask my colleagues to support this simple amendment to strike that provision, and I would like to thank Democrats and Republicans who already support this. Thank you, and I yield back.
Thank you. If there's no further discussion on the amendment, the question, Mr. McHenry, recognized.
Madam Chair, can I be recognized to strike the last word?
Gentleman from New York is recognized.
Madam Chair, I move to strike the last word, and I have great respect for my friend and colleague from the great state of Ohio, Ms. Beatty, and I try to work with her as often as possible to find solutions on a host of issues in this committee, as I think we all should be striving to do. To that end, I'd like to engage Ms. Beatty in a brief colloquy to discuss the changes that we worked on together to make on this bill. Expanding employment opportunities for those seeking gainful employment is very much a policy that I support. One place where we worked together to improve the bill was on the question of rehabilitation. The fact that an individual once committed a crime does not automatically mean they can never be trusted or that they are unqualified to work in our financial system. Current FDIC policy establishes a 9-question framework to determine whether there are fair concerns over hiring an ex-offender. According to the FDIC policy, the purpose of the framework is to determine whether the individual, quote, may constitute a threat to the safety and soundness of the insured institution or the interests of its depositors or threaten to impair public confidence in the insured institution. H.R. 5911 provides that in assessing whether an individual has been rehabilitated, the FDIC may consider, and I quote again, any additional information the corporation determines necessary for safety and soundness. Ms. Beatty, is it your intention that provision would allow the FDIC to continue employing the 9-question framework as it is relevant to considering Section 19 waivers?
Well, first of all, let me thank my friend from Missouri, Congresswoman Ann Wagner, for engaging in this dialogue and also for the work that we have done not only in this Congress but in previous Congress. Let me just say this issue, I'm glad you brought it to our attention, and I believe the changes we made in this section in the amendment in the nature of a substitute will give the FDIC the flexibility to incorporate the factors they currently use when evaluating consent applications and answering the questions whether or not a person has been rehabilitated. Let me also say, as we know, the FDIC has revisited and updated their statement of policy several times since, I believe, since 1990s. They also have come up with factors they believe that best allow them to balance the interest of maintaining safety and soundness when giving these justice-involved individuals a second chance. The language we included in this bill is intended to give the FDIC that flexibility to incorporate those factors. And in the future, as they routinely revisit their statement of policy for implementation of Section 19, as you referenced, they will be able to maintain that flexibility to not only adopt, but to also evolve those factors as they see fit with their changes. And thank you for that. I have pulled up and reviewed all of those policies, so you are definitely correct in asking those questions.
Well, I am very, very pleased to hear that, Ms. Beatty, and I think safety and soundness should be the guiding principle here. So Section 19 is not intended to be punitive. It is designed to protect our financial institutions from risk. I support this bill as amended. I thank my friend, gentlelady from Ohio, for working with me and with our staffs in such a diligent way to come to a positive outcome. And I yield back, Madam Chair, the balance of my time.
Thank you.
Thank
The
you.
gentleman from North Carolina, Mr. McHenry, is recognized.
Well, thank you, Madam Chair, and move to strike the last word. And I too like to voice my support for the ANS, and I'd like to thank my colleagues across the aisle for working with me and the Republicans on the committee and Ranking Member Wagner for the updated changes here. I think it's important we continue to expand employment opportunities to all Americans, including ex-offenders. In fact, much of this bill codifies rules promulgated under the Trump administration. In fact, under the leadership of Chair McWilliams, who was appointed by President Trump, the FDIC issued rules on Section 19 not once but twice. Their rules balance the dual objectives of, one, allowing qualified individuals to obtain employment through the waiver process, and two, the need to protect the safety and soundness of our banking system. And I think they did a nice job of balancing that. This bill is representative of that good work and therefore is a bipartisan product. And I appreciate Chairwoman Beatty for approaching it that way, to take the McWilliams policy and putting the mark of Congress on it. This bill, as amended, balances all those interests. They balance the FDIC. The waiver process does not ultimately bar an individual from obtaining employment at a bank if they're allowed to show they will not present a risk to the safety and soundness of the institution or the public. The waiver process is simply an additional layer of security through which an applicant is determined to be fit with the responsibilities that come with working in the financial services sector. Again, I believe that once you have repaid your debt to society, you ultimately deserve every chance to find the best job opportunity possible and begin the journey to rebuilding your life and building a new life and achieving economic success. Again, and we're a nation of second chances after all. And again, I'm happy to support this bill, and I think it's smart, fair policy, and I think the Trump administration knew it was smart, fair policy, and I'm glad that this Congress agrees, and I expect a nice bipartisan vote as a result of that. And with that, I urge support and yield back.
Thank you. The gentlewoman from Pennsylvania, Ms. Dean, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I, too, thank and rise in support of Congresswoman Beatty's legislation, the Fair Hiring and Banking Act. The United States has the highest percent of incarcerated people in the world. What's more, in my home state of Pennsylvania, we have an even higher rate, incarcerating 725 of every 100,000 people, a shameful statistic. I am committed to not just reducing the incarcerated population, but also ensuring that incarcerated men and women have the resources to effectively reintegrate in society upon release, because as we know, most incarcerated people will earn release. Last month, I introduced the Promoting Reentry Through Education in Prisons Act, or the PREP Act. The PREP Act would ensure that incarcerated people receive the educational opportunities they need to successfully reenter their communities after completing their sentences. 2/3 of formerly incarcerated people are rearrested within 3 years. However, incarcerated people who participated in educational programs were 43% less likely to re-enter prison than those who did not. Still, no amount of education or job training will be sufficient when people with past minor criminal offenses are often excluded by law from employment opportunities, such has been the case at banks and credit unions. This legislation before us today would reduce these barriers to employment at banks and credit unions for justice-involved people by shortening the look-back period for criminal offenses and providing exception for de minimis offenses, including lesser offenses such as fines, fees, or driving with an expired license. Importantly, when assessing consent applications for justice-involved people, regulators are directed by this legislation to consider evidence of rehabilitation, including successful participation in job preparation and educational programs. This common sense legislation, this bipartisan legislation, will help ensure that justice-involved men and women are not unfairly and unnecessarily excluded from employment opportunities at banks and credit unions. I thank Congresswoman Beatty for introducing the Fair Hiring and Banking Act, and I ask my colleagues to join me in supporting this important legislation. Madam Chair, I yield back.
Thank you. The gentleman from Ohio, Mr. Gonzalez, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I want to thank my fellow Buckeye, Ms. Beatty, for her efforts on this legislation and broader efforts to support increased diversity and inclusion within our financial system. We may not always see eye to eye on every issue, but she is a tremendous leader, and I love partnering with her on these important initiatives. I'm proud to support this legislation. This bill builds upon the work of the FDIC to provide individuals greater employment opportunities if they have had a prior criminal offense. And while it makes sense for there to be more stringent requirements in place to work at a financial institution, this bill takes sensible steps to expand employment opportunities at banks and credit unions. When individuals have served their time and they've stayed out of trouble, they should have opportunities to work in the banking sector if they are qualified. This helps break down those barriers that too often still stand in the way to those who have paid their debt to society, and also will help financial institutions have access to a larger talent pool needed to fill those open jobs. I want to thank Ms. Beatty again for her work on this important issue. I encourage my colleagues to support the bill, and I yield back.
Thank you. I now recognize myself for 5 minutes. I support the Fair Hiring in Banking Act, sponsored by Representative Joyce Beatty, who is the chair of our Diversity and Inclusion Subcommittee, and commend her good work to ensure justice-involved individuals have a fair shot at getting a job in the banking sector. I also want to thank Ranking Member McHenry for working with Representative Beatty to address your concerns so that this bill can advance with broad bipartisan support. As the National Employment Law Project explained in a statement to our committee, and I quote, "The United States imprisons more of its people than any other nation. More than 70 million people, or nearly 1 in 3 adults, have an arrest or conviction record that can show up on an employment-related background check for a variety of reasons, ranging from over-policing and racial profiling to racist charging and sentencing decisions. The people impacted by mass criminalization are disproportionately Black and Latinx, quote unquote. Indeed, systemic racism in our criminal justice system is a stain on our democracy, but so are the systemic barriers that exist for people leaving incarceration. Criminal records often prevent individuals from securing employment, and employment is a critical part of a justice-involved individual's ability to re-enter society and rebuild their lives. We must ensure that both those who are innocent and those who have successfully paid their debt to society can fully participate in our economy, including by getting a job at a bank or credit union. The Federal Deposit Insurance Corporation, that is FDIC, and National Credit Union Administration, NCUA, have updated guidance to depository institutions in recent years to remove barriers from certain justice-involved individuals who apply to work at a bank or credit union. H.R. 5911 builds on these efforts by, among other things, clarifying that certain offenses that happened more than 7 years ago, or certain offenses committed by individuals 21 years and younger, do not automatically prevent them from getting a job in the banking and credit union industry. The bill also ensures federal agencies consider a combination of factors, including rehabilitation evidence when reviewing applications that they must provide consent for. So I urge all members to support this important bill, and I yield back my time. Is there further discussion on the amendment? The question now occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment is adopted. Is there further discussion on Amendment 2, the amendment in the nature of a substitute? If not, the question now occurs on approving the amendment in the nature of a substitute as amended. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5911 as amended to be reported favorably to the House. All those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it. Pursuant, let's see what we have here. If a recorded vote is, the ayes have it, and H.R. 5911 is agreed to. Pursuant to Section C5 of Committee 3.
They're buffing me right now. Okay, I'm ready to go. I'm ready to go, but, okay. Give me words to go with it.
Is Mr. Gottheimer on the platform?
See the big empty chair.
If not, we are going to move to Mrs. San Nicolas, and we will return back to Mr. Foster. Pursuant to notice, I now call up H.R. 5910, Holding SPACs Accountable Act of 2021. The clerk will report the bill.
H.R. 5910, a bill to amend the Securities Act of 1933 and the Securities Exchange Act of 1934 to exclude certain special purposes acquisitions companies from safe harbor for forward-looking statements and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America.
Without objection, the first reading of H.R. 5910 is dispensed with. The gentleman from Guam, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
An amendment in the nature of a substitute to H.R. 5910, offered by Mr. San Nicolas of Guam. Strike all after the enacting clause.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Guam, Mr. San Nicolas, for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair.
Mr. San Nicolas, you're recognized. He was on. Mr. San Nicolas, you're recognized.
Mr. Huizenga wanted to strike the last word. We can go to him and come back. Oh, his videos.
I'm going to move forward until Mr. San Nicolas is able to resolve whatever problems he's having with the technology. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes to strike the last word.
Well, thank you, Madam Chair. I know it's fairly unusual to have the objection laid out before the bill is actually laid out, but sure, let's move ahead with that. I would love to be able to have a bit of a back and forth with my colleague, but I don't know if he's in his office or here locally or if he's actually back in Guam, but this does once again point out the limitations of doing this via the internet and via this system. So anyway, look, at this point, this bill is yet another attempt by my colleagues on the other side to jump to conclusions and prematurely offer solutions without fully understanding whether there is an actual problem that needs to be solved. But I guess when you're a regulatory hammer, everything and every issue looks like a nail. So the problem with this approach is that these legislative actions have real-world consequences, and members on our committee on both sides of the aisle talk a lot about the strength of the American markets and the importance of preserving, not to mention improving, the health of capital markets so that investors have opportunities to grow their savings. And by the way, that means our economy improves. Yet this bill doesn't compute with those sentiments at all. 5910 would prohibit SPACs, these special acquisition companies, from taking advantage of providing forward-looking guidance and projections in offering their documents, which has been considered an important point for using the SPAC method to go public. SPAC offerings have helped boost the number of companies in our public markets after decades of declines. We've talked about that in committee for many, many times. In attacking SPAC offerings, Democrats risk further tightening of the IPO pipeline in American capital markets. We're already at a disadvantage, and we know this. It doesn't square with the Democrats' comments about nurturing the vibrancy of American capital markets and providing more investment opportunities for everyday investors. If they really meant it, why would we be going after this particular method? This bill captures how Democrats think about governing and write laws. We finally see a reversal in a decades-long bad trend away from the public markets, and Democrats' first inclination and instinct is to see a problem needing to be fixed, once again being a regulatory hammer. Perhaps this approach would be justified and could be justified if there was evidence of problems or harms that needed to be addressed for the integrity of our markets and the protection of everyday investors. But that is not the case here. In fact, recent reports indicate that institutional investors that make up a massive, large majority of the investment dollars at the IPO stage for these SPACs, while retail participation is minimal, it's small. And it does still tend to be qualified investors. I'm sure institutional investors can hold their own and have the resources to adequately analyze a SPAC's projections. At the very least, we should seek to better understand the specific issue of forward-looking statements and retail investor participation before rushing through a significant overhaul like 5910. A common theme for Democrats is that they know what's best for the everyday investor. They know how to invest your money better than you do, and they are more than okay with moving restrictive legislation that reduces investment choices before it's needed, all in the name of quote-unquote investor protection. So I disagree with that premise. On another note, the PSLRA was a bill passed in the 1990s with strong bipartisan majorities, so strong, in fact, that it was able to override a presidential veto. We should not be going back on the bipartisan progress from decades ago that this bill represents. If anything, we should consider extending its provisions to other public offerings if we're really, truly serious about trying to encourage public offerings so that retail investors can be involved, and not just those qualified investors and not just those institutional investors. Talk about trying to level the economic playing field. Here's a way that it has been done. So for these reasons, I oppose the bill. I encourage my colleagues to oppose it. I do look forward to hearing from the sponsor of the bill the rationale for it, and maybe one of my colleagues, once his rationale is laid out, maybe one of my colleagues will be able to recognize me so that we can have that rebuttal again. So I yield back the balance of my time.
Thank you very much. I now recognize the gentleman from Guam, Mr. San Nicolas, for 5 minutes to explain the bill and its amendment. And because of the problem that we were having now you have the opportunity to know where Mr. Huizinga is coming from. And so, Mr. Guam, Mr. San Nicholas from Guam, you have it.
Madam Chair, am I working now?
Yes.
Madam Chair, I don't mind being referred to as Mr. Michigan in the future, so.
Madam Chair, is my audio working now?
Yes, yes. Mr. San Nicholas?
I'm working now, Madam Chair. I'm just wanting to make sure. First of all, I'm totally breathtaken by the reference to Mr. Guam. I'm thinking that might be a career move sometime in the not too distant future, hopefully.
Jokes work.
While I still have a full head of hair. Anyway, am I okay to proceed, Madam Chair? I want to make sure that my technical difficulties have been
Yes.
Well, thank you, Madam Chair. I thank my colleague, Mr. Huizinga, for his elaborate objection. And I thank him as well for being such a good sport and going second when we really should have made some initial statements. And I apologize to the committee for our technical difficulties. Madam Chair, I want to make it very simple, break it down very simply on what this bill does. It simply replaces blank check companies with development or growth stage companies. And so what we're doing here is we're basically making sure that the companies that pretty much are in existence for the purposes of acquiring or merging or pretty much consolidating a particular industry are not making fraudulent statements to the people who are investing for that purpose. There is nothing in this bill that would actually prohibit a forward-looking statement. What it would do is it would make it a violation under Rule 10b-5 if any forward-looking statement was fraudulent, period. And so the real question that we have to ask ourselves today is, do we want to have special purpose acquisition companies going out there and merging or acquiring other companies and being able to make fraudulent statements as they try to attract investors in order to do so? If we're okay with an acquisition regime that's going to have a green light to make fraudulent statements, then we can continue with the status quo. However, if we want to actually strengthen the special purpose acquisition company process, we should do so by making sure that no SPACs can go out there and make fraudulent statements without consequence. So if we want to allow for the SPAC environment to be healthy and strong and to thrive and to actually increase the IPO market because investors are confident in what's happening and confident that they're not going to be told something dishonest or led down a fraudulent path, then let's pass this bill so that any forward-looking statements made by SPACs that are fraudulent would have consequence. Absent passing this bill, the safe harbor provisions of the forward-looking statements are going to allow for any potential bad actors to poison the well. And I don't want that to happen to SPACs. I don't want it to happen to investors. I don't want it to happen to a market that we want to continue to thrive and to be healthy for investors and for new enterprises to be able to form up similar to special purpose acquisition companies. And so that, Madam Chair, I hope that addresses any objections. I hope that it clarifies that this isn't something strictly to protect investors. It's something to protect SPACs in general and to allow for these type of operations to go out there with full confidence from the investors that the forward-looking statements that they're being informed of are not being presented to them in a fraudulent manner. Thank you, Madam Chair. Thank you for your patience and for your accommodation, and I yield back.
Thank you. The gentleman from Ohio, Mr. Gonzalez, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. And first, let me start by saying I have a lot of respect for Mr. San Nicholas. I think he's a very thoughtful member. Unfortunately, I have to encourage my colleagues to oppose this legislation. I think it's a good thing to have options for companies to come public. I think ultimately that's a net positive for our capital markets. If there's competition for these companies and ways for them to get public. Now, SPACs have some issues. I would agree with that. I don't see the forward-looking guidance issue as being all that important, frankly. And as somebody who follows the capital markets, and has invested in private companies that give all kinds of forward-looking guidance, I actually find it very beneficial, and I think a lot of investors do. If we were going to move in a particular direction, I'd frankly like to see more forward guidance for traditional IPOs, for direct listings, as well as SPACs. It's, especially in the SPAC world, in many instances, it's a situation where a lot of the companies don't have an operating history when you're going through the de-SPAC, when you're going through the acquisition, don't have an operating history, and so they have to produce the forward guidance and the projections so that you can at least get a sense of when they might start throwing off revenue. And then as an investor, you can hold them accountable to that. If they're hitting their targets, if the business is progressing, then you know that maybe that's something that you want to be a part of. If they're continuing to miss the targets and they're missing the projections, then the stock gets pummeled, as it should. And that's just how investing works. And so, to go after the forward-looking guidance or prevent it in any way, I frankly think is the wrong direction. I'd like to go in the opposite direction. Give more information to investors, give more opportunities for retail investors to participate in our public markets, and even the playing field across IPOs, SPACs, and direct listings.
Will the gentleman from Ohio yield for?
Absolutely.
I have a kind of a question for you. You and I have had these conversations about capital markets in the past, and I would agree with you that I think your quote was SPACs have some issues. And I wouldn't disagree with that, but I'm wondering if the gentleman from Ohio would agree that those institutional investors who we've established are the vast majority of the investors into these SPACs, whether they have been able to self-regulate and correct some of those concerns as they've been going in and demanding information, et cetera.
Absolutely. I think you're seeing the trends on that are improving dramatically. I would agree with that. And then if you want my 2 minutes.
That's okay. Enough. Thank you.
Yeah. Okay, well, I will yield back then.
You need any more time?
I recognize myself for 5 minutes. I want to thank Mr. San Nicolas for introducing this important investor protection and accountability bill. As members know, special purpose acquisition companies, or SPACs, they are essentially shell companies created with one purpose: to find and merge with a private company and bring that private company into the public markets. This is an alternative process to go public than a typical initial public offering or IPO. Once the SPAC identifies the firm they want to acquire or merge with and to attract new investors, the SPAC then makes projections about how much profit or revenue they expect to make. These projections are too often complete conjecture. For example, as one witness before the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets testified in May of this year, quote, 9 electric vehicle companies that have come public through a SPAC in 2020 have combined annual revenue of $139 million, but between them, they projected to investors they would generate $26 billion in annual revenue by 2024, quote unquote. One of these electric vehicle companies that projected it would generate more than $1 billion of revenue by September of this year recently reported that it is actually 100 million in the red, and it continues to lose money. Another of these SPAC companies projected at the time it announced the merger that it would generate more than $4 billion in revenue by next year. Unfortunately, this company is in dire financial straits today. Mr. San Nicolas' bill would essentially impose accountability on these SPACs as they make forward-looking statements. These companies would be subject to liability if they mislead or mislead their investors with wild and inaccurate projections, the same way all other public companies are. I support this bill, and I urge my colleagues to do the same. I yield back the remainder of my time. For what purpose does the gentleman from Michigan seek recognition?
Madam Chair, Mr. Michigan has an amendment at the desk.
Okay, Mr. Michigan. We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, I would like to reserve a point of order on the amendment. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute.
Madam Chair, I ask unanimous consent the amendment be considered as read.
Without objection, the amendment is considered as read.
Assuming I'm recognized, but I don't want to jump the gun.
The gentleman is recognized for 5 minutes
Well,
to explain the amendment.
Well, thank you, Madam Chair. I am tempted to request that the author of the bill respond to my amendment before I actually describe it.
It won't happen this time.
Okay, all right.
Thank you.
I appreciate that. Well, I believe this amendment actually takes the prudent approach with the issue that we are discussing today. So instead of skipping steps and prematurely rushing through a restrictive bill that excludes the special acquisition companies from the PSLRA, which is the Private Securities Litigation Reform Act of 1995, which, by the way, was designed to, quote, limit frivolous securities lawsuits. There is a safe harbor in that PSLRA for these types of companies. So my amendment correctly puts us at step one. Let's thoroughly examine the issue to find out if this is even a significant problem that is causing harm to everyday investors. And again, we've established that vast majority of the investors are institutional investors who have significant resources to verify and investigate themselves what they are being told. So, starting with an examination of the issues before advancing substantive legislation is a simple, straightforward approach to ensure smart and careful lawmaking. So my amendment simply directs the SEC to, one, study how SPACs use forward-looking statements and projections within the PSLRA's safe harbor, and two, report its findings to this committee within 180 days of its enactment. So this is not a drag it out and let's see what's going to happen in the next decade. This is 180 days. So the need for this bill has not been thoroughly demonstrated, in my opinion. So by studying how the safe harbor for forward projections is used by SPACs, this committee will better be equipped to proceed with legislation that strikes the right balance between facilitating capital formation and protecting investors. If the SEC's findings demonstrate a need for a policy change, so be it. Let's have that discussion at that time. To my knowledge, at this point, short of one somewhat obscure reference and speech by a temporary person at the SEC, this issue has not been addressed by the SEC. It hasn't been requested by the SEC. And as we all know, most of the folks in the SEC, especially the head, have opinions, and they aren't afraid to express those opinions. So I want to note that it's quite possible, instead of being a problem that SPACs can use forward-looking statements, the real problem may be that other IPOs do not feel like they can rely on the PSLRA for safe harbor. So I think we should study whether the safe harbor should be extended to other offerings before passing substantive legislation. But that would be another step beyond this. So I'd much rather wait 180 days for the SEC's findings, which my amendment would allow, and get this right. Why jam through this bill that has no regard for potentially harmful downstream consequences? So the bottom line, a vote for my amendment is a vote for the prudent approach to legislating and addressing issues, if any, with the PSLRA's safe harbor situation. So with that, Madam Chair, I yield back the balance.
Thank you. Is there further debate on the
Madam Chair,
Who seeks recognition?
Mr. Hill of Arkansas.
I'm going to go to Mr. San Nicolas first, the gentleman from Guam. Mr. San Nicolas is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I just have a question for the mover of the amendment. It states here that the amendment is to have the Securities and Exchange Commission carry out a study of how special purpose acquisition companies use forward-looking statements. I'm just not quite getting what the purpose of the amendment is. Aren't forward-looking statements used to make forward-looking statements?
Is the gentleman asking a question?
The amendment will yield? Yes, if the gentleman will yield.
So, Yeah, if gentleman's yielding to me, I'm happy. As you just quoted, this is line 3, study. The Securities and Exchange Commission shall carry out a study of how special purpose acquisition companies use forward-looking statements within the safe harbors provided by Section 27A of the Securities Act of 1933 and Section 21E of the Securities and Exchange Act of 1934. So I'm not sure where the confusion is. We are asking them to do a study of how how SPACs use forward-looking statements. So in other words, have they been useful? Have they been productive? Have they actually been positive as we've been trying to build these markets? So I hope that explains it. It seems like it's fairly straightforward to me. And then at the second, line 9, is the report no later than at the end of a 180-day period beginning from the date of enactment of this act, the Commission shall issue a report to our committee containing all findings and determinations made in carrying out the study required under subsection A. So it's one page. I'm not trying to hide the ball on this. I'm not trying to do anything other than say, let's have a study about it.
Thank you. Reclaiming my time, Madam Chair. Forward-looking statements are used to make forward-looking statements. I don't understand what the mover of the amendment is attempting to study. If the mover of the amendment does not know how forward-looking statements are used, you can easily give a one-paragraph definition here that you can Google if you have to, and I'm sure the SEC will be able to explain it. Forward-looking statements which qualify for safe harbor use phrases which include any tense from present to future or similar inflection, words like believe, estimate, anticipate, plan, predict, may, hope, can, will, should, expect, likely, typically indicate a forward-looking statement which qualifies for safe harbor. We're going to spend 180 days studying SPACs and how they use forward-looking statements, which basically are just statements of anticipation of what the company is going to be doing. I mean, we're going to see a consistent outcome with every single SPAC using forward-looking statements in that manner.
Will the gentleman yield for a question?
No, that is entirely out of character with what actually 5910 is intended to do, which is to prevent fraudulent forward-looking statements being made by special purpose acquisition companies. And so we don't need to waste 180 days studying how forward-looking statements are used. SPACs will be using them the same way non-SPACs will be using them. What we should be doing is making sure that we're getting in front of fraudulent actions by potentially bad actors in the SPAC universe. And instead of waiting for the actual data to show that people have been harmed and fraud has been committed, we should actually be getting in front of these things. We should not be waiting for an Enron to happen before we actually take action. Let's be proactive for once. And this isn't being proactive in a sense that's going to cut anything off. If special purpose acquisition companies want to make forward-looking statements, they're more than welcome to. They just better make sure they're not fraudulent. And I don't see what's bad about that. I don't see why we can't get behind that. I don't see how that's not going to actually strengthen the SPAC environment. And so I would respectfully ask my colleagues to not waste our time, the public's time, or the SEC's time with this amendment and to vote no on it. Thank you, Madam Chair. I yield back.
Will the gentleman yield?
Gentleman's time has expired. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes to strike the last word.
Strike the last word. Thank you, Madam Chair, for having us convene today in this markup. And I want to speak in favor of my friend from Michigan, Mr. Michigan's amendment to Mr. Guam's underlying bill. I'd like to say first that the underlying issue, and Madam Chair, you illuminated it on talking about some of these EV companies that are one of the most popular business strategies to be used in SPACs. When you have zero interest rates by the Federal Reserve and injecting $120 billion of cash into the economy every month, on top of that, you have an unparalleled bull market. And so everybody is trying to get an equity yield and everybody is going into the stock market. And when you have zero interest rates and no base rate, you have people making a lot of bad asset allocation decisions out there. In this EV arena, I think it'll be even worse given the federal government's intervention in the EV charging stations, and you'll see even more companies with problems trying to go public in this EV arena. But to use your example, I think Trevor Milton, the Nikola principal, is probably going to be indicted for fraud. He's under Department of Justice and SEC investigation, and that's about all the reasons that you still have liability when you go public via a SPAC. And I would remind my friend from Guam and thank my friend from Michigan that when you look at forward-looking statements in a SPAC, who are those being initially read by? Public and private institutional investors. They're qualified institutional buyers. They're looking at that to assess the forecast and see if they want to put up their money first before the SPAC is ever converted to a public market format. So when you limit target company information, I think essentially you're effectively just saying you want to kill SPACs as a way of going public. That's essentially what I think the majority is proposing with their bills today. And, you know, that's their prerogative to do that. But as my friend from Michigan has said, we need more ways to get companies public. We've lost 50% of our public companies over the last 30 years. Being public is very expensive. Going public itself is very expensive. And the SPAC methodology, while it's nothing new, is one way to do that. So these forward-looking statements are important for these institutional investors to determine that if a SPAC idea is worthy of consideration. Finally, we have to know that those SPAC investors have the right to vote on that proposed acquisition. They have to have the information to approve that process. So there are ways to improve SPACs, and I think we've had testimony before this committee to do that. So the whole point of where the gentleman from Michigan is coming from is let's look at how forward-looking statements are used by SPACs and find ways, if there are things that should be done to constructively improve the quality of that information, the timeliness of that information. But it doesn't stop someone who is a bad actor, whether they've gone through a traditional IPO or a SPAC, from being brought to justice by the Department of Justice and the SEC for violating either investor protection standards and the securities laws or fraud at a higher standard. So that's why I support my friend from Michigan, and let me yield some time to him if he needs it.
Yeah, thank you. I appreciate the friend from Arkansas. And in all seriousness, I'm trying to figure out where the gentleman from Guam's objection is. Maybe it's the word how a special purpose acquisition use these things. And I understand why the gentleman is defensive about his bill and his less than gentle attempt to clarify his objection to my amendment. But clearly the intent is, as my friend from Arkansas laid out, is how many are used? How are they used? The effects of the usage, whether people have actually been harmed, not just institutional investors. And I will note, and I wrote this down, that the gentleman used a phrase as he was describing my amendment, quote, "We don't need to wait to see if it is harmful," close quote. Well, folks, you have it. There it is. A regulatory hammer has to find a nail, whether there's a problem or not, and they don't even want to see if we could do a study to figure out whether there's a problem. So with that, I yield back to the gentleman.
And I yield back to the chair.
Thank you. The gentleman from Wisconsin's Mr. Stile is recognized for 5 minutes to strike the last word.
I strike the last word. I'll be brief. I do think it is very appropriate to pass this amendment, to study this. We have a need to make sure private companies are gaining access to public markets. And what we see is, instead of a thoughtful approach, and I don't want to steal the thunder of an amendment I'm going to bring here in a moment, but we have a need to examine the regulatory burden being put forward by our securities laws that are in many ways preventing companies from going public in a traditional manner. We then, instead of being thoughtful and looking at thoughtful ways to make sure that these companies have access to capital markets, allowing the United States to maintain one of the strongest capital markets, or the strongest capital markets in the world, allowing entrepreneurial, enterprising individuals to gain access to prosperity here in the United States. What we see is time and again, my colleagues on the other side of the aisle looking to remove opportunities, make it more difficult to enter the public markets. I think that's what the underlying amendment that we are examining does. In the amendment being offered by my colleague from Michigan, I think is a thoughtful approach to take a little bit of a pause, analyze how these forward-looking statements are being used so that we don't simply throw the baby out with the bathwater, that we make sure that there are opportunities for companies to gain access to public markets. And with that, I support the amendment, and I will yield back.
Thank you. I recognize.
Well, I'm sorry, will the gentleman yield?
The gentleman yields back. I recognize myself for 5 minutes. This amendment strikes the requirement that a shell company used to bring a private company public cannot make fraudulent statements about its projections. Instead, it would require the SEC to study whether fraud is bad and whether some companies going public can lie to potential investors while companies going through an IPO have to be held accountable. I'm not surprised that this amendment is being offered, as there seems to be a general disagreement in Congress these days about making false statements and whether folks should be held accountable. Some of my colleagues in the House continue to question the legitimacy of President Biden's win over Trump in the 2020 election, the efficacy of vaccines, and whether climate change is real. But Democrats note that false and fraudulent statements harm our markets and investor confidence. This amendment is a wrong approach, and I urge all members to reject it, and I will yield to the gentleman from Guam for any additional statements he may have.
Well, thank you, Madam Chairman, and I thank the mover of the amendment and those who endorsed it for their attempts to try and clarify why they are seeking this direction. And I just wanted to have the opportunity to respond to the claim that this is some kind of regulatory hammer trying to find a nail. I think we should all agree that fraud is bad, and it hurts people, and it hurts investors, and it hurts the markets, and it hurts the very SPACs that we're trying to both, I think, protect here. If we're not going to make sure that forward-looking statements are not fraudulent, then we're really just going to be opening up even institutional investors to making bad decisions based on information that may not be accurate and may intentionally be misrepresented. And so I would like to ask my colleagues to just be mindful of that here. We're not trying to prevent forward-looking statements. We're just trying to prevent fraudulent ones. Thank you, Madam Chairman, for the opportunity, and I yield back.
Thank you. The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes to strike the last word.
Thank you, Chair. And I want to just say that I support the amendment. I think it is an appropriate path to go down. I think we have to keep in context that the SPAC was created to create a pathway for gaining access to public markets, and we don't want to squelch that, and particularly we don't want to pick winners and losers between the processes or the paths that are available. So I support this. I think we should take a principled, careful look at it, and I think that's what Mr. Michigan is proposing, and with that, I'll yield the balance of my time to Mr. Michigan.
Well, I appreciate my colleague from Tennessee in doing that. I'll just simply note, this is 180 days. It's not 18 months. It's 180 days. And the majority can move ahead and do whatever they want to do. But the simple fact is the SEC has not done a previous study on SPACs. There is nothing that can be pointed to. But apparently the majority believes that it is settled. And it's settled that there is fraud. Therefore, it needs to be addressed. And again, this is simply an attempt to figure out whether there really is a problem, which apparently is settled in the majority's mindset. Again, I quote my colleague from Guam who says we don't need to wait to see if it's harmful, because we know that already. But the SEC hasn't said that. Nobody else has said that. We don't know the breadth of this. So with that, I think my colleague from Tennessee, the gentleman from Arkansas, would like a moment, and I yield back to the gentleman from Tennessee.
Thank you, and I'll yield time to Mr. Hill.
Thanks, Mr. Rose, my friend from Tennessee. Again, if this is such an important topic, we're knee-jerking in these bills. We have another bill we're going to be talking about. Many of these same comments are going to be made. So why don't we have a capital markets hearing in detail and bring everybody back again to talk about this? For example, the American Securities Association offered a number of concrete and specific suggestions that might be considered by the committee to improve SPAC transactions. We're not talking about those today. We're talking about things that parachuted into this hearing today that we've not had any bipartisan discussion about. And for example, they make a number, I'm just looking at them, that a Form S-4 and a proxy statement should be filed at the same time or shortly after a deal is announced, and things like that. They've got a number of constructive suggestions, but we're not even doing that. We're taking this approach to change commissions in a bill offered by Mr. Sherman in a few minutes, and this, which I think is just purely an unrealistic idea of saying that forward-looking statements can't be used to go public via SPAC. I mean, it's just a null set. And so I think that it's ill-conceived, and I yield back to my friend from Tennessee.
Thank you, Mr. Hill, and I yield back to the chair.
Thank you very much. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment say aye.
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 Those opposed, no.
No.
In the opinion
No.
of the chair, the noes have it.
Madam Chair, I request a recorded vote on that.
A recorded vote has been requested pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of our amendment to the amendment in the nature of a substitute?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 5910, offered by Mr. Stile of Wisconsin. Strike section 1 and 2 and insert.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain the amendment.
Thank you, Madam Chair. I will note that the amendment wasn't distributed to at least those of us down here in the front row. It would be great if my colleagues could get a copy of it, because I think it's a pretty good amendment. Mr. San Nicolas, Mr. Guam, if you will, is one of the more thoughtful members of this committee, and I appreciate his efforts. But I think his efforts actually missed the mark. And so my amendment takes the rhetoric that we're having here about the importance of strengthening Americans' public markets with legislative action. It streamlines the reporting requirements so new companies can actually invest in growth and innovation. And my colleagues on the other side of the aisle are paying some lip service here to the importance of markets in the U.S. capital markets, but the most attractive destination for public companies to list on exchanges, the United States of America, is troubled with burdensome regulations. And so we need to get back and focus in on the goal of what we're trying to do. We're trying to make the United States capital markets the most vibrant capital markets in the world while still providing appropriate protections for investors. And so what we're looking at in the bill that I've put forward, it really is an attempt to make sure that we're doing just that. And so the underlying bill, the underlying amendment, if you will, I think really jeopardizes American IPOs, and ultimately it hurts our public markets. We really should be focusing in on growing public markets, and this amendment backs up that rhetoric. My amendment gives emerging growth companies, EGCs, if you will, more time to continue to expand and develop their products under streamlined disclosures and filing procedures. EGCs can currently maintain their status as an EGC for up to 5 years after they become a public company. However, many of these companies are not generating enough revenue 5 years after going public to support the compliance costs that come with the loss of an EGC status. So by providing a 5-year extension, as my amendment allows, small startup companies can avoid spending their time and money on bureaucratic regulations and burdensome compliance procedures meant for larger and more mature firms. My amendment provides meaningful help to young companies entering our public markets so they can compete. Instead of paying lip service to entrepreneurs and job creators, this amendment actually helps companies remain public, giving them access to dynamic public markets. If you support strong public markets and you want to help entrepreneurs and startups, I encourage you to support my amendment. And Madam Chairwoman, I will yield back.
Is there further debate on the amendment?
Madam Chair.
Who seeks recognition? The gentleman from Arkansas, Mr. Hill,
Strike the last word.
recognized for 5 minutes.
Thank you, Madam Chair. I want to speak in favor of my friend from Wisconsin's amendment. We've talked about the cost of going public, and a SPAC strategy reduces some of that front-end cost, allows scale using the merger and acquisition method with the special acquisition vehicle. But going public, he raises an important point, which is the ongoing cost of going public, which is just increasing year after year, causing us to have to wait much, much longer before a company can go public. I mean, it's one of the barriers to our IPO market and why we have 50% fewer companies listed on our exchanges is because those costs are so high. Companies wait much longer and have to have a much higher market cap before they can actually afford to be public. That's a problem. It used to be you could go public and have a market cap of $250 million or something like that, very successfully do the compliance costs, recruit the top talent, execute your business strategy. Now, time and time again, we hear about $1 billion is that economy of scale. Or we hear members talk about unicorns in the technology sector, where these companies have no revenue, no earnings, but they have an enormous market cap and they go public due to the popularity of whatever the business strategy is. But for that rank and file company, that good idea, whether it's Broadway Lighting or a company I spoke to in Wisconsin several years ago trying to comply with the conflict minerals rule. That one point for this company up in my good friend from Wisconsin's home state was spending $250,000 per year trying to comply with that one rule so that they were in line with expectations of the SEC. And they still have a modest amount of confidence. Could they go through every track of every SKU of the various component property that they sell, properties that they sell? So this cost is important, and that's why this amendment from my friend from Wisconsin is a great idea for both sides of the aisle to demonstrate the importance that an emerging growth company, if they're not quite hitting the hurdles, that we extend their time to lower this compliance cost with being a public company and give them time for more growth. So I want to thank my friend from Wisconsin for his constructive amendment, and let me yield to him if he'd like some more time.
Yeah, I'll take the minute. I appreciate my comments from my good friend from Arkansas. I think this whole conversation about SPACs that we're looking at, there are some things that we should think about and look at. And my colleague from Michigan brings forward a really thoughtful bill to do just that. But as we look at what really could be playing out as regulatory arbitrage, instead of taking the regulatory burden and moving it up on everybody, let's look at thoughtful ways to bring it down. Let's bring the regulatory burden down where it's not necessary. And so this bill on, in particular, emerging growth companies does just that. Let's look at ways of reducing the regulatory burden and encouraging companies to come into the public markets rather than simply raising the regulatory burden on all companies, regardless of whether or not that's actually productive to investors to make sure that they're appropriately protected, or whether or not that's productive for any other purpose. And so I think we have a real opportunity to go back into our securities laws across the board, in this case, emerging growth companies, and look at ways of reducing the regulatory burden rather than coming in and simply raising the regulatory burden on everybody across the board. And my amendment attempts to do that. I appreciate my friend from Arkansas. I'll yield back to him.
Yeah, I thank my friend from Wisconsin. And I'll remind all of our hardworking members of this committee, we're trying to reduce these regulatory burdens to encourage more capital formation, encourage more public companies, and not have capital tied up and stayed in private hands, so that more of our union pension holders, more of our 401k participants, more of our small investors who use an IRA to buy ETFs to start their nest egg, to save for college or a house or their retirement, they have more choice. But in the name of investor protection, I think the majority occasionally limits choice, reduces the number of public companies, hurts the ability of retirees and Americans to have more investment opportunities for the long haul. So I think from my friend from Wisconsin, I urge a yes vote on his amendment, and I yield back the balance of my time.
The gentleman from Guam, Mr. San Nicolas, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chairman. I would like to thank the gentleman from Wisconsin for his efforts here with this amendment. I really think that this is something I would very much like to sit down with him on, drill down deeper into, and try and see if there is something workable here, because his case does make sense to a certain extent, and I think that trying to find ways to help these companies that are in that difficult gray area of having been around for too long to the point where they're kind of disqualifying themselves from certain exemptions, but still not actually at the place where having to meet certain requirements is something they can do on a healthy basis. That's definitely a conversation I'd be willing to have. What I just can't do is I just can't accept striking sections 1 and 2 of the original legislation that I'm trying to move through this process. And the reason is because, first of all, this amendment that he's proposing does absolutely nothing to address the fraud that we're trying to address in the risk profile of forward-looking statements of special purpose acquisition companies. It does try and go into addressing the challenges that growth companies are experiencing as they try and stand up further. And I think that we can definitely talk about that. But in the context of striking what we are intending to do with HR 5910, I just don't think it's the appropriate time. And it's for that reason that I would object. But again, to reiterate, Madam Chairwoman, the purpose of HR 5910 is to make sure that these special purpose acquisition companies are not making fraudulent forward-looking statements. They can make forward-looking statements, but if it's fraudulent, they'll be liable under Rule 10b-5. Right now, they're not liable under Rule 10b-5 because they're skirting around it, because they're not technically penny stocks that are issuing initial public offering shares on a penny stock basis. And that's the old language that we're trying to replace. If we're going to keep up our regulations based on how the new environments are evolving, which is our responsibility as lawmakers, if fraudulent forward-looking statements for penny stocks were bad back then when $5 a share for a penny stock was something that was a reasonable threshold, we're way past that now, and we need to help these laws evolve to protect our investors and also to protect the industry. As was mentioned by my colleague from Arkansas earlier, we want to try and create more capital inflows into our public markets, but nothing destroys that more than fraud. Nothing destroys that more than the destruction of capital by bad actors. And that's something that we have a responsibility to look out for in order to make sure that we have a healthy market. And I'm not necessarily one for an overly regulated market, but absolutely a healthy one. And HR 5910 ensures we have a healthy one with respect to forward-looking statements from special purpose acquisition companies. Thank you, Madam Chair. I yield back.
The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word in favor of this amendment, and I agree with my colleague from Wisconsin about the importance of bolstering American public markets by introducing legislation, and in this case, an amendment that encourages private companies to go public and stay public. And sadly, as we've discussed in this committee for many, many years, we had seen a decline in the number of American-based IPOs until the last year or so. And on top of that, companies that were going public were doing so at a much later stage in their life cycle. And thankfully, that downward trend has most recently reversed. Now, we have to ask ourselves why. Many would point to tax reform that had happened. Many would point to regulatory reform. Many would point to us creating an atmosphere that allows these companies. And we're not talking just tech companies and unicorns along that line. We're talking about, in Michigan, good, solid manufacturers. These companies that are looking at next generation decisions, and they're trying to figure out where they go to continue growth and to continue to provide good paying jobs to their employees. And along those lines, then, companies are taking advantage of the multiple avenues our securities laws provide for going public. So in addition to more younger companies that are starting to go public, we need to have these on-ramps and scaled compliance requirements like we see with emerging growth company framework created by the Bipartisan Jobs Act of 2012. I was in my first term when the current chair was an intimate part of that with the Obama administration and the new Republican majority. So instead of adding restrictions on mechanisms for companies to go public, as I would say 5910 does, we should be working to improve conditions and hurdles so more companies can go public and remain public, especially those smaller companies that don't have the type of revenue that some of these tech companies have. So this amendment reduces regulatory costs and streamlines those disclosures for small public companies, ensuring that startups have a place in American public markets that they had in the past, so that everyday investors can actually access those companies. So let's make sure we're focusing on growth and expansion at critical early stages. This amendment does that. It'll encourage more companies to go public, creating additional investment opportunities for all Americans. So I support Mr. Stiles' amendment. I applaud him for his effort to support entrepreneurs, everyday investors, and the overall strength and competitiveness of capital markets. And I hope that is the focus of this committee. So with that, I yield back the balance of my time.
Is there further debate on the amendment? I now recognize myself for 5 minutes. Once again, my Republican colleagues are offering an amendment that would allow shell companies to make fraudulent statements to would-be investors. Mr. Stiles' amendment we go even further and seek to expand the emerging growth company from what was supposed to be a 5-year on-ramp to instead be a decade-long exemption from complying with important investor protections. My Republican colleagues wrongly think that our markets are the envy of the world because we simply have public companies. That's wrong. Our markets are the envy of the world because investors around the world have confidence in the financials and statements of our public companies and are therefore willing to entrust them with their capital. This amendment would, however, deny those investors across the world the information they need. We should be asking ourselves how we can ensure that investors are confident in the statements and information of public companies, not taking away the information from them. That is what Mr. San Nicolas amendment does. And so I urge all members to reject the style amendment, and I yield the balance of my time to the gentleman from Guam if he wishes to take additional time in response to this amendment.
Well, thank you, Madam Chair. Actually, your statements fully cover what I was going to clarify with, so I thank you very much, and I yield back.
Thank you. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment say aye.
Aye. Aye.
Those opposed, no. No.
No.
No. The noes have it, and the noes have it, and the amendment is not agreed to.
Madam Chair, I request a recorded vote.
A recorded vote has been requested pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments, without objection, the previous question is ordered on H.R. 5910 and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, I now call up H.R. 5914, the Empowering States to Protect Seniors from Bad Actors Act. The clerk will report the bill.
A bill to, H.R. 5914, a bill to amend the Investor Protection and Security Reform Act of 2010 to provide grants to states for enhanced protection of senior investors and senior policyholders, and for other purposes. To be it enacted by the Senate.
Without objection, the first reading of H.R. 5914 is dispensed with. The gentleman from New Jersey, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
An amendment in the nature of a substitute to H.R. 5914, offered by Mr. Gottheimer of New Jersey. Strike all after the enacting clause and insert the following.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from New Jersey, Mr. Gottheimer, for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chairwoman. Since I took office, I've been committed to helping seniors save their hard-earned money for retirement, to help them cut taxes and afford their prescription drugs, and to protecting Social Security and Medicare so at the end of the day they can afford to stay in our communities, like in my home state of Jersey, and enjoy their lives with their children and their grandchildren. But when it comes to scams, everyone knows the old saying, if it looks too good to be true, it probably is. Unfortunately, there are millions of seniors across the country who have been victims of financial scams and abuses that have cheated them out of their rightful retirements. It's appalling, it's offensive, it's unacceptable. According to a report from the Senate Special Committee on Aging released last Congress, older Americans lose approximately $3 billion each year to financial scams and abuse. A separate survey from the Investor Protection Trust found that approximately 7 million Americans have reported being victims of exploitation. That's only what's being reported. Only 1 in every 24 cases of elder abuse actually ever gets reported. And IRS impersonation calls and fraudulent tech support calls are among the most widely used and costly scams targeting all Americans, particularly older Americans. In fact, more than 2.5 million Americans have been targeted by scammers impersonating IRS officials, costing more than 15,800 taxpayers at least $80 million since 2013. More than 3 million Americans are victims of tech support scams, where scammers pretend to be with a reputable tech company and persuade seniors to provide personal and bank information. My mom, of blessed memory, was even a victim of one of these scammers. Someone claiming to be an IRS agent threatened her. I remember she called me and claimed that I had messed up her tax return, and then we found out the truth. During the depths of the pandemic, COVID scammers targeted older Americans with promises of quicker access to vaccines or pandemic relief benefits, preying on those whose only wish is to hug their family members again. Today, we're doing something about it by marking up my bill, the Empowering States to Protect Seniors from Bad Actors Act, to help protect seniors from scams. To help combat this growing issue of senior scams, my bill would establish a new federal grant program at the Security and Exchange Commission, which would invest in state-led task force dedicated to protecting our seniors from financial fraud. These task forces will be able to hire additional investigative staff, invest in equipment and training for regulators and law enforcement, and educate seniors on financial fraud. With this work being able to take place at the state level, with more outreach to local communities and seniors, we can more fully fight back against those hucksters who are scamming our seniors. There's nothing partisan about this. This is just standing by as Democrats and Republicans to protect our seniors. They've given so much to our country. We should always have their backs and help protect them from predators who want to take advantage of them. It's incumbent on us to protect them from scammers and abuse. I urge my colleagues across this committee to vote yes on this common sense piece of legislation. Thank you so much, and I yield back.
Thank you. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word in support of Mr. Gottheimer's bill 5914, the Empowering States to Protect Seniors from Bad Actors Act. And I, too, like him, I had older parents who are both unfortunately gone, but who we saw that almost daily deluge of information coming at them, and it was very challenging at times. So I'd like to thank Mr. Gottheimer for his work on this important topic, and frankly, the majority staff working with the minority staff to make this a bipartisan bill. I will note that despite some charges from my Dem colleagues regarding the last bill and the amendment process, we all believe fraud is wrong. We all believe that. Protecting investors, especially those most vulnerable to financial crimes and fraud, is a bipartisan issue. In 2018, there was roughly 52 million Americans over the age of 65. That's going up. By 2060, that number is expected to reach 95 million, and they'll represent approximately 23% of the nation's total population. Seniors and senior investors, these folks, both directly and indirectly, own a huge share of our country's wealth. It's especially important that we protect this population against fraud and punish bad actors to discourage further crimes against these investors that are largely on fixed incomes. This bill is intended to better equip state securities regulators and their enforcement and investigative arms to pursue, punish, and deter financial crimes and fraud committed against these senior investors. I support that goal. However, I will note that this is a new grant program at the Commission. That is why I also do support the provisions in the bill that require an interim and a final report to Congress regarding this program. And I think it will allow us to determine the effectiveness of the program before a further renewal of the program, and I think that's just a prudent approach to this. So with that, I urge a yes vote on H.R. 5914, and I yield back the balance of my time.
Thank you. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chairwoman. I'd like to strike the last word in support of this very important bill. I first want to thank you for bringing it forward for markup today, and thank my colleague, Mr. Gottheimer, for bringing the bill forward for all the reasons that he said in his remarks. I don't think that Congress would have a greater responsibility than to make sure that we take care of our seniors. I know as the first career job I ever really had was as a geriatric social worker. And I learned firsthand all the challenges that many of our seniors face and continue to face even today. And consumer fraud was always at the top of the list. Mr. Gardheimer is absolutely correct, particularly with these robocalls and telephone calls that continue to go to seniors when they're at home, bothering them and giving them all these ideas on invitations to participate in fraud and scams. So again, thank you to Mr. Gardheimer. Financial abuse against the elderly is a prevalent problem all over the country, and it's one that we must address, leaving no tool unused. The National Council on Aging recently found that elderly financial abuse costs Americans an estimated $36.5 billion every year. I'm glad to see that this bill ensures that the agency charged with investor protection, the SEC, has the authority to oversee this issue. It is our duty as members of Congress to ensure that every regulator has the capacity to carry out their charges and that the American people are protected from the fraudulent and exploitative endeavors that often plague the financial services industry and make it harder for good actors to thrive. It is also our duty to do all we can to stop the targeting of seniors for fraud. This bipartisan bill is a step in the right direction. I give it my full support, and I urge all our colleagues to join us. And Madam Chair, I think it's music to my ears to hear that this will be a bipartisan bill. That should always be the case, especially when it comes to protecting our seniors. With that, I yield back.
Thank you. I now recognize myself for 5 minutes. I want to thank Mr. Gottheimer for introducing this legislation that would provide grants to state securities regulators to support their programs that specifically protect senior investors. I also want to thank Mr. McHenry for working with us on this important bill. Seniors are particularly vulnerable to investment frauds, scams, and deceptive practices. Just last month, in his annual report on elder fraud and abuse, the Department of Justice reported that in 2020 alone, seniors suffered from $1 billion in financial losses due to fraud. State securities regulators and insurance departments are at the forefront of protecting our investors. The SEC, with the support of its investor, advocate, and division of enforcement, is well placed to evaluate and support grant programs to bolster the efforts of states to better protect senior investors. This bill is widely supported by investor advocates and state securities regulators. So I would like to thank North American Securities Administrators Association for their years-long engagement on this issue. I also want to thank Consumer Federation of America, Public Citizen, and CFA Institute. And I again thank the members on both sides of the aisle for coming together on this bill. And I thank you certainly, Mr. Gottheimer, and I urge its passage. I yield back the balance of my time. Is there further discussion of or amendment to H.R. 5914? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. Pursuant to notice, I now call up H.R. 2620. Did we finish? Did we finish with that?
Yeah, we haven't done a recorded vote.
The ayes have it, and H.R. 5914 is agreed to. Pursuant to notice, I now call up H.R. 2620, the Investor Choice Act of 2021. The clerk will report the bill.
H.R. 2620, a bill to amend the Securities Exchange Act of 1934 to prohibit mandatory pre-dispute arbitration agreements and for other purposes.
Without objection, the first reading of H.R. 2620 is dispensed with. The gentleman from Illinois, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 2620, offered by Mr. Foster. Strike all after the enacting clause and insert the following. Section 1, short title.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. The gentleman from Illinois, Mr. Foster, has an amendment to the amendment in the nature of a substitute at the desk. We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, the clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 2620, offered by Mr. Foster of Illinois. Add at the end of the following.
Without objection, the amendment will be considered as read. I now recognize the gentleman from Illinois, Mr. Foster, for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. I want to thank Chairwoman Waters for her leadership in bringing up this bill and for continuing to prioritize important and timely topics. And I will be speaking both on the ANS and the amendment to the ANS that simply adds an SEC study of Section 7 to this amendment. Investors using stockbrokers and financial advisors are often forced to surrender their right to go to court to resolve disputes and instead are forced to go through arbitration proceedings. This is because agreements between brokers and financial advisors and their customers typically contain take-it-or-leave-it arbitration provisions that customers have no leverage to negotiate. While this practice is financially effective for such companies, oftentimes this translates to a less than fair process for consumers' dispute resolution that may disproportionately favor the companies and advisors in the form of biased or inexperienced arbitration panels, insufficient opportunities to appeal, resulting in an unbalanced set of decisions and outcomes. This statistical imbalance in these decisions has been documented over years of hearings in this committee. The Investor Choice Act of 2021 would put an end to this unfair situation. This bill would amend the Securities and Exchange Act of 1934 to ban mandatory arbitration clauses in contracts between registered advisors and their clients. Secondly, the bill would prohibit a company from going public or listing on a securities exchange if the company mandates arbitration in any dispute between itself and its shareholders. We have voted on this issue before in this committee in response to evidence of flagrant abuse and mandatory arbitration clauses. Section 921 of the Dodd-Frank Act authorized the SEC to prohibit or restrict the use of pre-dispute arbitration if it was in the public interest and necessary for the protection of investors. The SEC, however, did not use this authority, so H.R. 2620 simply prohibits mandatory arbitration clauses in customer agreements with broker-dealers and investment advisors. This bill will have no effect on arbitration proceedings that have already commenced and would not limit the ability for investors to choose arbitration should they so elect. It also preserves the ability to settle disputes before any procedures begin, hence the name, the Investor Choice Act of 2021. Section 7 is added by the final amendment to the ANS, and it's the result of ongoing discussions about the potential need in the context of this legislation to examine and possibly modify FINRA Rule 12200, which gives investors the ability to force their disputes into arbitration. The merits of altering or abolishing Rule 12200 can be argued from multiple directions. On one hand, it restores a symmetry between investors and broker-dealers in the choice of dispute resolution venue. On the other hand, it might prevent an investor who does not have as deep pockets as his broker or financial advisor to choose a potentially less expensive arbitration, which might be all that he or she might be able to afford. So this amendment simply directs the SEC to study this issue and report back to Congress. The SEC and state securities regulators have limited resources and cannot police all bad conduct, like, for example, corporate fraud against shareholders, entirely on their own. The Supreme Court has long recognized that securities class actions are, quote, an essential supplement to government enforcement powers. Moreover, an investor's right, if necessary, to go to court to recover monetary damages is essential to maintaining confidence in our capital markets and encourage future investments by our constituents. No investor should have to choose between participating in our markets and receiving financial advice on one hand and accessing our court system on the other. Finally, I would like to mention that as this bill moves forward in the legislative process and gains support in the Senate, that I'm sympathetic to possibly carving out from this certain nonprofit entities from this provision, specifically nonprofit entities that are owned and governed by their investors and are willing to periodically document the balance and fairness and fairness in the results of their arbitration proceedings to the SEC in order to maintain this exemption. So I'm willing to consider that as it goes forward. I just wanted to mention it in this debate. But I'm proud to support this bill as it stands and urge all of my colleagues to do the same and yield back the balance of my time.
Thank you, Mr. Foster. The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I'll make a note here that I think has been made earlier today. We should be having a capital markets subcommittee hearing with witnesses on these particular issues, especially when the author is talking about an amendment to his own amendment, when he's talking about the discussion of additional changes might be in order. So in addition to other issues, I think this is one of those issues that we ought to have a robust actual debate about. Instead, this bill takes the drastic step of eliminating an important legal recourse available to everyday investors, so just to have a couple of issues that need to be addressed. And I think I heard, if the gentleman from Illinois doesn't mind me asking him a couple of questions, I think I heard the gentleman acknowledge that the SEC has not used its authority under Section 921 of Dodd-Frank. Is that correct? Did you acknowledge that?
Yes, yeah, that is correct.
So
There was an expectation, at least on the part of, I believe, our side of the aisle, that it would use that authority, and for whatever reason it is not.
okay, well, reclaiming my time, neither one of us were here when Dodd-Frank passed.
I was, sir. I was. I'm
sorry.
proud that I was 10 for 10 in getting my amendments into the Dodd-Frank.
Okay, so, but in that Section 921, which granted the SEC authority to prohibit or restrict the use of pre-dispute arbitration if it was in the public interest, and that's the phrase, in the public interest, which is very broad. The SEC, in my experience here on my 6th term, the SEC seems to rarely pass up a rulemaking opportunity, especially when it's been given significant leash by Congress. But however, in the last 11 years, this has not been used once. Never has it been used, not even to restrict mandatory arbitration. So it begs the question, if you've got both Republican and Democrat-led commissions, because we've had both, over those years, wouldn't we think that at least somebody would raise that question? A Republican-led commission or a Democrat-led commission? And I will note that we've had more Democrat-led commissions than we have had Republican-led commissions over the last 12 years, going on 12 years. And it would seem that that's an indicator to me. And if the SEC has never used its authority to limit or restrict them, why is it appropriate now for Congress to choose the nuclear option and completely ban mandatory arbitration agreements with broker-dealers and investment advisors altogether? I mean, that's where I'm really lost from the author's perspective. I have one other question for the gentleman. The majority memo states that 30% of FINRA arbitration determinations go unpaid. Are you, in my opinion, are you aware the origins of that? It appears that it's a cherry-picked statistic provided by the trial lawyers that does not count the clear majority of FINRA arbitration claims that have been settled before they reach an arbitration panel. Is it your intention to continue to use that number as a justification?
I cannot provide you the details on the origin of that number, but we'll get back to you on that.
Well,
It's
as we
not
look at
crucial
FINRA data typically shows that only 2% of cases result in awarded damages that go unpaid. And so it seems to me that it's certainly misleading to use this 30% figure as the majority has here. In my last minute, I guess I want to talk about the upcoming manager's amendment, which puts in the study. We've had a couple of discussions about studies and the usefulness of those studies today. In fact, 2 of the last 3 bills have had that discussion. What is really confusing to me is that we're going to pass this bill that bans arbitration, then study the issue that has been banned to see if it should be banned. That does not make sense to me. If the gentleman was more interested in eliminating the language of the bill and put in a study, that would make far more sense to me as we are moving ahead. So I know my time is approaching, and I'm sure the gentleman will have some comments through some of his other members. But with that, Madam Chair, I oppose the ANS overall. I certainly don't oppose the idea of having the study and would encourage that. And with that, my time has expired.
The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I do strike the last word. I'd like to speak in opposition to this proposed bill today, and with no editorial comment about my affection for my friend from Illinois or our co-chairmanship of the Entrepreneurship Caucus in the House or his great participation in our House. But I come in opposition to this because for 3 decades prior to serving in Congress, I was a managing securities principal licensed by FINRA and the SEC in the securities business, doing that business both institutional investors and retail investors. And And therefore, I've seen this in practice in firms, both investment advisory firms as well as in broker-dealers. And then, in addition to that, I also served on the District Business Conduct Committee of District 5 of the old NASD, FINRA, even before the new rules, meaning I sat on the disciplinary committee that determined outcomes of complaints brought about firms or registered representatives in those firms. And then I participated in, as that District Business Conduct Committee emerged, to overseeing the arbitration process and reviewing the arbitration awards by the independent arbitration panels that FINRA began to set up in the 1990s to address how to better represent retail investors and employees in securities firms who sought arbitration. So I come at this debate with some practical background. And for decades, arbitration has provided a fair, efficient, and effective venue and the best way to quickly resolve disputes between investors and brokers. Compared to going to court or participating in some sort of a class, arbitration is typically less expensive, it's faster, it's investor-friendly, and it's particularly helpful for small investors, and here's why. There are nearly 70 FINRA hearing venues across the country, including at least one in every state in Puerto Rico, meaning these venues are accessible to the complainant. There are limitations on the motions to dismiss before investors even get to present their case. FINRA offers arbitration fee waivers for parties that demonstrate financial hardship. Investors have the right to opt out of arbitration and instead participate in a class action suit, a fact not frequently mentioned by the proponents. And it's a transparent process with public oversight and regulatory supervision from independent regulators. But don't take my word for it or my experience. FINRA itself notes, and I quote, "Dispute resolution methods such as mediation and arbitration are faster and less expensive than a state or federal lawsuit. Investors receive some compensation more than 70% of the time." And so for this reasons, I think strictly banning pre-dispute arbitration clauses for investment advisors or broker-dealers would be a mistake. And as my friend from Michigan has said, the SEC, under Democratic leadership, and under Republican leadership since Dodd-Frank was signed into law, has not, pursuant to Section 921 of Dodd-Frank, taken an action to abolish across-the-board mandatory arbitration. Further, there's a reason in the Investor Choice Act has not been passed into law since it's been introduced Congress after Congress since 2013. And in my view, it's the same reason Congress voted in 2017 to repeal the CFPB's rule banning mandatory arbitration in consumer financial contracts through a Congressional Review Act. That's because arbitration does work. H.R. 2620 would take away one of the best dispute resolutions options for investors that it claims to help. So I urge my colleagues to oppose this proposal, and I yield back the balance of my time.
Thank you. I recognize myself for 5 minutes. I thank Mr. Foster for introducing this long overdue investor protection bill. Since the 1980s, the use of forced arbitration clauses has proliferated in the securities industry. Nearly all broker-dealers require their clients to sign an agreement that forces the client into arbitration proceedings and limits their ability to seek justice through the courts. For retail investors, signing these forced arbitration agreements is a condition of opening an account or receiving the services of financial professionals. These agreements also limit an investor's right to join a class action lawsuit and often require a retail investor to resolve disputes through FINRA arbitration. Rather than go any further with my statement, I am going to yield to Mr. Foster because Mr. Huizinga is at a loss, he's confused, and he doesn't understand any of this. So with that, I yield to Mr. Foster. Please explain it to him.
Well, first off, I want to thank Mr. Hill for his comments, and I agree with him that arbitration is very often the best procedure for dispute resolution, cheap, efficient, everything he said. But investors should still have the choice. And that is the spirit of this bill. You have to give them the leverage in negotiations to, if they're not getting a fair deal, to take it to the courts. I think it's just fundamental in our, freedom and rights as Americans, and it shouldn't be something that can be signed away. In response to Mr. Huizenga's questions about the final amendment, the SEC study, there's a very subtle point here. If this legislation is passed as it stands and Rule 12-200 is left intact, there will be an asymmetry in that the investors or the consumers will be able to they'll be able to force the proceedings into arbitration, which will not be an option open to the broker-dealers or financial advisors. And so there is an asymmetry if 12-200 is left intact. Maybe that's a good thing, maybe it's not a good thing. The danger that at least I am sensitive to is that they may take advantage of threatening if the financial advisors are able to force it into the courts and the investor, the consumer, does not have the wherewithal to really hire lawyers and fight this thing. They will just be subject to sort of the threat of, okay, take it to court, enjoy paying for the lawyer, and that will just cause them to give up. And giving the investors the ability to request that it and have that request honored, to move it to arbitration will allow them to take advantage of all the benefits that Mr. Hill mentioned of arbitration. And so the argument for leaving Rule 12-200 in place or not is something that can be argued either way, and I think it's an appropriate fine-tuning of this to look at that after this becomes law. That's the extent of my response to their questions, and I yield back.
Thank you. The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word. The securities arbitration system has worked effectively for decades as it provides a faster, fairer, and lower-cost way to resolve disputes compared to accessing the courts. Smaller investors in particular benefit from FINRA arbitration because it provides certainty about where disputes will be solved and helps secure faster, less expensive dispute resolution. In fact, as Mr. Hill noted, 76% of customers in arbitration receive a recovery. The securities arbitration system has worked effectively for decades because it is subject to public oversight, regulatory oversight by multiple independent regulators, and rules of procedure that benefit investors. If arbitration were to be eliminated, it would not be a win for investors. However, eliminating arbitration would likely significantly benefit trial lawyers. I must oppose H.R. 2620 as this bill is a solution, I believe, in search of a problem. Madam Chair, I yield back the balance of my time.
What is it? The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes to strike the last word.
Thank you, Chair Lady, and I yield my 5 minutes to Mr. Foster.
Of which I will use just 15 seconds to reiterate that this will not eliminate arbitration, which is something that has been mentioned again and again. It simply gives the investor the choice to not use arbitration if they don't think it's in their best interest. Thank you. I'll yield back.
The gentleman is recognized, Mr. Foster. Mr. Scott,
I believe I've yielded back
yielded to you.
Scott. Yes. I yield back.
The gentleman yields back. If there is no further discussion on the amendment, the question now occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Aye. Aye. In the opinion of the chair, the ayes have it, and the amendment is adopted. Is there further discussion of or amendment to the amendment in the nature of a substitute? Is there further discussion of or amendment to H.R. 2620? If not, the question now occurs on approving the amendment in the nature of a substitute as amendment. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute as amended is agreed to. The question now occurs on ordering H.R. 2620 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Aye. Those opposed, no.
No.
In the opinion of the chair, the ayes have it.
Madam Chair, I request a recorded roll call vote.
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered. Pursuant to Section C5 of Committee Rule 3, the vote on this question is postponed. I appreciate your patience. If we could just pause for a minute, we'll return shortly to Mr. Sherman's legislation. Sit down. Pursuant to notice, I now call up H.R. 5913, the Protecting Investors from Excessive SPACs Fees Act of 2021. The clerk will report the bill.
H.R. 5913, a bill to prohibit registered investment advisors, brokers, and registered representatives of brokers from...
Without objection, the first reading of H.R. 5913 is dispensed with. The gentleman from California, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5913, offered by Mr. Sherman of California. Strike all after the enacting clause and insert...
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from California, Mr. Sherman, for 5 minutes to explain the bill and his amendment.
I'd like to thank the chairwoman and my colleagues for working to bring this important bill forward. The amendment in nature of a substitute for the Protecting Investors for Excessive SPAC Fees Act will ensure that investors have the information that they need when they make a SPAC investment and at each stage of the investment decision-making process. I think investors will then be in a position to protect themselves from excessive fees. Putting this in context, most of the transactions in our capital markets are one investor selling to another investor. That's well and good, but what's most important is when money is going from investors to operating companies. Now, most of the time, most of the dollars that's happening, it's the issuance of bonds. But the most important investments are when equity is put forward, where the investors are willing to take the risk. Now, most of those dollars are going in to old and established companies, companies that have been public for a long time. But the most important of the equity dollars are those where the investors are willing to take a risk for a company that has not been public. Traditionally, this was done with a traditional IPO, initial public offering. And since the early 1930s, we have had a system to protect investors and to encourage investors to invest in IPOs. But those rules envisioned that the company would be selling its stock and going public. Now, roughly half the dollars raised are raised not through, raised in an IPO transaction, are raised not through a traditional IPO, but through a SPAC. Since the start of 2020, really just a year and 3 quarters ago, there have been 746 SPACs that have gone public, which is twice the number of new SPACs as in the prior 14 years. Over the course of the last year, SPAC IPOs have collectively raised $75 billion in gross proceeds, representing 48% of all the IPO fundraising. So what this bill does is it requires the SEC to update its disclosure process for a whole new process for taking a company public. We take forms that were originally designed for the traditional IPO and instead require disclosures for a 3-step process. First, when the investors put in their money, the SPAC. Second, the de-SPAC, when investors are told what company their money will buy, on what terms. And then third, and they're given an opportunity to take their money out or leave it in. That may be the most important time an investment decision is made. And then third, when they vote on the final deal as to how much, as to whether it should go forward. This will bring together in one place a chance for investors to see the 3 ways in which insiders are being compensated. First, there is the traditional 20% dilution that the sponsors of the original SPAC are getting. Now, that may not be 20% of the entire ultimate company's value, but 20% of, or even sometimes ultimately more, of the new money raised. or of the number of shares made available to those who are putting in new money. Second, there is the dilution if additional money is necessary to close the deal, hedge funds and other professional investors are brought in, usually on better terms than the retail investors were originally given, so as to complete the deal. So there are two elements of dilution. In addition, there are cash fees paid to a variety of those doing the work to make the deal happen. This will bring together those three fees, and I believe will provide some additional competitive pressure to keep these fees as reasonable as possible. I look forward to both regular IPOs and SPACs providing a mechanism for investor money to take the risk on companies that have not been previously public, and to do so with all the disclosures necessary to make sure that investors are protected and getting a good deal. I yield back.
The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. As I move to strike the last word, it is with an intention here to hopefully get a little dialogue with my colleague on this. And again, I would point out this would be great to have another issue on a cap markets subcommittee on. In fact, we did have a hearing on SPACs in May, where Scott Cooper of Andreessen Horowitz pointed out that the SPAC markets have gone through a number of major self-corrections in response to institutional investor input on several aspects of SPACs, and including the size and nature of sponsor promotes and those kinds of things. And I guess that would be one of my questions to the author as we're looking at the promote compensation structure. There is often critics that point to as much as 20% of the value of a SPAC's common shares following an IPO, which is then going to reduce shareholder payouts. That's one of the statistics highlighted in the majority staff markup memo. The previous version of your bill would have prohibited brokers and investment advisors from recommending to retail investors SPACs that grant over 5% of promote to the sponsors. Given all that, it seems that at least your colleagues are concerned about promote compensation and are seeking to address that in the bill. I'm assuming that's part of your motivation?
The gentleman is correct in pointing out that this bill is, with the amendment in nature of a substitute, far more modest and I hope far less controversial than the original proposal.
Okay, I appreciate that. But again, we know based on previous bill text and from commonly cited criticisms, SPAC naysayers dislike the promote compensation structure flat out. This version would prohibit brokers and advisors from recommending and facilitating SPAC trades unless they make certain disclosures for an investor to make a, quote, informed decision. Just a moment, informed decision whether to redeem or hold those securities. The term, quote, informed decision is an unidentified term that only appears once in the Exchange Act and is in a completely different context. So I'm curious what this bill means, very briefly, what you mean by informed decision.
Well, first, there's no longer a 5% standard in this bill. There is no longer an attempt to, and I hope that people will vote on whether they like this bill in this form, not in its previous form. As to the, basically, it requires the disclosures. You're not going to be able to do a SPAC without broker-dealers involved, and it requires these disclosures be available.
Reclaiming my time on this, are you intending to backdoor SEC substantive determinations on what is or isn't an appropriate amount to promote? I mean, you're trying to hand this to
No,
SEC?
there is nothing in this bill that says 5% is the right amount or 20% is the right amount. This is purely a disclosure bill.
Well, okay. Well, as we had discussed in the previous bill, I don't see the SEC, when given leash, be much of a self-regulator on putting forward those things. So my concern about that is that the SEC is going to see a void and fill it, unlike what our previous bill had, where you've seen no action by the SEC when they had an opportunity. Moving on, is there any provision in federal securities law that you can point to that has a similar prohibition on providing investment advice for securities of businesses that are structured in a perfectly legal but congressionally disfavored manner.
Again, the purpose is to require the disclosure. That's a mechanism. I don't know if that mechanism's been used, but there are plenty of bills that require disclosure.
I'll take that as a no. And then finally, your bill would require disclosures on the amount of cash per share expected to be held and cash per share depleted under, quote, various redemption scenarios. Your bill also requires disclosure at the length of time of the SPAC sponsors intend to hold the securities. So here's my question. How does your bill requiring these uncertain and forward-looking disclosures square with the premise of the previous, one of the previous bills from Mr. San Nicolas that we considered stripping the PSLRA safe harbor for certain forward-looking statements from SPACs? These two things seem to be in conflict.
His bill dealt with projecting the business activity of the company. This would simply indicate their current intention with regard to holding the stock. Obviously, that intention can change for many reasons.
All right, well, my time is closing out, but I will note that that is called forward-looking, and it looks like we're in conflict with that. With that, I yield back.
The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. In a way, I appreciate the effort from Mr. Sherman. As I said earlier with Mr. San Nicolas's bill, and I've mentioned in previous committee hearings, I am happy that we have multiple avenues for companies to come public, but SPACs do have some issues around, I would argue, how transparent they are. I think it is hard in many instances for retailers to fully understand the fees that promote the incentive alignment inside of, and that's true from the original IPO to the DSPAC and on through. And so I do think that this is an area of inquiry that's legitimate. Having said that, I think it's premature, given what we've heard. This bill is premature, given what we've heard from Chairman Gensler. Not too long ago, he was before our committee. If you look at some of his commentary, public commentary, whether on television or in similar Senate hearings, it's obvious, it's clear that the SEC is looking at this, and they are studying what we should do with respect to disclosures for SPACs and to make them more uniform. I think the market's taking care of a lot of the issues, frankly, without SEC guidance, but it seems to me that the right thing to do would be to wait for their guidance and their study to conclude before we rush into such a prescriptive bill. And I think that's probably another issue I have with it. It's awfully prescriptive, especially for something that we just sort of got recently. And so I think the sensible thing to do is to acknowledge that there are areas where we can improve disclosures in the SPAC universe, but to do it in a way that's a little bit more measured and be a bit more patient with it. The other part that, and maybe I'm just misunderstanding the bill, but this notion of doubling down and doing even more to put more companies in the accredited investor bucket. The accredited investor rule, just by its effect, excludes primarily Black and brown, Black and Latino investors from being able to participate in some of the fastest growing, highest returning businesses in the country. I was reading just yesterday an article from a Mariah Lichtenstern, who self-identifies Black woman of multi-ethnic heritage working in the tech startup world. The title is "Investors Still Engage in Racist Redlining. Why Haven't We Done Something About It?" This is in Fortune. She cites a statistic that I've never seen, but I think really strikes at the heart of this, which is 10 to 15% of American households qualify as accredited. 10 to 15% hit the wealth threshold, okay? Of that 10 to 15%, 1.3% are Black, 2.8% are Latino. So why on earth do we perpetuate a system where we have we know from previous hearings, the highest grossing asset classes net of fees restricted by virtue of the way the bill, by virtue of the way the rule is written, almost exclusively restricted to white households and not Black and Latino households. I think that's something, frankly, that there's a whole bunch of reasons why we shouldn't like the accredited investor rule, but that's absolutely one of them. I think we want as many people to have access to high returning equity instruments and investment options as humanly possible. And when we put more companies in the accredited investor bucket, we are systematically reducing opportunities for the very people that we are trying to eliminate barriers for. And so that's a separate issue, obviously, but I did notice the accredited investor provision in here and thought it was worth mentioning. But the real crux of the argument against this bill is I think it's premature. And though I do agree with my colleague on a lot of his thoughts with respect to where we can clean up the disclosure regime, I think it's best to wait for the study and then go from there. And with that, I yield back.
Thank you. For what purpose does the gentleman from Michigan seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, I would like to reserve a point of order on the amendment. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5913, offered by Ms. Huizenga of Michigan. Strike section 1 and 2.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain the amendment.
Thank you, Madam Chair. My amendment is intended to ensure that this committee legislates with care and prudence and based on facts. Again, we've had this discussion with some other bills today. I believe this bill skips over the research and analysis stages that are needed before we develop the policy and before arbitrarily determining which SPAC securities brokers and advisors can recommend and trade based on their disclosures. This committee should first direct the SEC to conduct a thorough study and report back to us on SPACs. An SEC study will pinpoint what precise issues with SPACs, if any, are needed to be addressed with legislation. And that's different than rulemaking. A study will also provide clarity on market realities, including issues that the market is correcting on its own in absence of regulation. Specifically, my amendment directs the SEC to study 1, the economics of SPAC transactions, 2, trading dynamics of SPACs, institutional and retail investor initiatives, incentives, and behavior at each stage of the SPAC lifestyle. In addition, the amendment directs the SEC to examine the ultimate dilution borne by shareholders after the de-SPAC combination. So I understand from the author that there's a number of changes that have been made, including this, the 20% and 5%, but it does seem to me that committee Democrats believe even a minimal amount of promote is bad somehow. So, however, SPAC markets have recently self-corrected on these issues in large part to the institutional investor class that has put the vast majority of money into these. So for example, the private investment in public equity investors, or PIPE, investors have increasingly required SPAC sponsors to hold their shares for longer lengths of time following the de-SPAC of the company. This self-correction is also occurring for the size and nature of sponsor promotes, not to mention a recent study found that SPAC sponsors only receive about 7.7% of the combined company following the merger. This is significantly lower than the 20% rate that has been cited in the markup memo by the majority. There is so much more we need to understand about SPACs before we engage in lawmaking that specifically and significantly changes the rules of the road for SPACs. So my amendment is a comprehensive, my amendment and its comprehensive SEC study on SPACs will provide us with the knowledge needed to legislate based on the realities of the SPAC market and not common misunderstandings or invented and created problems. For that reason, I urge the support of my amendment, and I yield back the balance of my time.
Thank you. The gentleman from California. Mr. Sherman is recognized for 5 minutes to strike the last word.
I have great respect for the author of the amendment. I must rise in opposition. This bill started as a bill to prohibit. It has now been downscaled, and I think appropriately, to a bill to disclose. But this amendment takes a disclosure bill and turns it into a study bill. It basically guts the bill. We're told that we should just wait, that this is premature. Wait a minute. Half the IPO market does not have appropriate disclosures. We've seen 746 SPACs in just the last year and 3 quarters. We've seen this go twice as many in a year and 3 quarters as it was in the prior 14 years. Now is not the time to wait. We're told that African Americans and working families and Latinos and others will be excluded. The statistics quoted by the gentleman fail to mention that the overwhelming bulk of money that working class people have in the stock market is through their pension plans. And of course, all those pension plans qualify as accredited investors. If you leave out pension plans, you're leaving out 90% of working class investment in our stock markets, and then you're getting the wrong picture. I should have concluded this in my opening statement. This is a bipartisan bill, not because I have co-sponsors here, but because this bill is very similar to the bill introduced by Senator John Kennedy in the Senate. And I should be giving him credit for much of the language. Would that I be apt to give a senator credit for anything. In particular, the gentleman, Mr. Huizenga, raises the question about disclosing cash per share. The provision, the amount of cash per share expected to be held by the special purpose acquisition company immediately prior to the merger under the various redemption scenarios, that language I stole from Senator Kennedy. So it's hard to call that partisan Democratic language, or language that, or even language that I personally wrote. So we have a exploding area in terms of size. It deserves disclosure, not prohibition, and we should act now to make sure that investors have the disclosure. After we do that, we can fine-tune those disclosures as appropriate. But to leave, to wait for another 746 SPACs to go forward without appropriate disclosure, I think is a dereliction of our duty. There is this discussion about whether it's 7% or 20%. I think that depends upon how you measure it. Often the typical SPAC might buy a third of, say, a target company. And if you measure what the promoters get of the target company, you'd say maybe it's 7%. If you look at what the promoters get in terms of the new investors' share of the target company, you might say it's 20, 21%. So that's just a matter of what you're looking at. Remember that in the typical SPAC, you're not buying the whole company. You're buying half, a third, a quarter of a company that has been operating and where those who own the company today retain a major share. So this is a bill for which I should give Senator John Kennedy of Louisiana substantial credit. It is a bill that needs to move forward now. It is a bill that should not be gutted by this amendment. It is not a bill that prohibits it is simply a bill that requires disclosure. And
Will the gentleman yield for
I
a
will
quick, real briefly? My point in citing that language was not to be in conflict with you or Senator Kennedy. It was asking the question, how does that fit with one of the previous bills earlier today dealing with forward? So that was
forward-looking projections is a term used when you're projecting what your sales of the underlying target company will be 2, 3, 4 years down the road. And that is something that is somewhat unknowable, and that is something we provide liability laws to prevent in the traditional IPO. So where your traditional IPO can't make a projection of the future business operations, we shouldn't allow it, or we should have the same rules for a SPAC as we do in a traditional IPO. That's somebody else's bill. This is a disclosure bill. Please vote for it.
Is there further debate on the amendment?
Move to strike the last word.
Who seeks recognition?
Gonzalez from Ohio.
Gentleman is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I'll be brief. Given my comments earlier, I think it's, frankly, I just want to thank Mr. Huizenga for this thoughtful amendment. I think this is exactly the right way to proceed with what is a very complicated issue around SPAC disclosures. And, you know, I, in some sense, as I've said, agree with the motivations of my colleague from California. I'd like to point out to him what Mr. Huizenga is calling for is 180 days of a pause whereby we can have a study concluded by the SEC. I don't think the world's going to end. I don't think the SPACs are going to somehow destroy the economy the way that sometimes I hear from a rhetorical standpoint. I think 180 days is a fine amount of time where we can get the expertise of the SEC. We can allow them to weigh in on this very important issue, which again, we agree in many respects around the motivation. But I think it is premature, and Mr. Huizenga's amendment strikes the perfect balance in my view. And with that, I yield back.
Will the gentleman yield?
Sure.
I agree with your sentiments. The world will not end if we wait 180 days. On the other hand, the world will not end if we move forward with this bill and have it and tell the SEC to go forward with a particular disclosure regime, and then give the SEC the authority to fine-tune that disclosure regime, and then in a few years, perhaps pass another bill that further fine-tunes the disclosure regime. You can say a big chunk of the economy might end if this was a prohibition bill. This is a disclosure bill. None of these disclosures will end the world.
Reclaiming my time quickly.
Yes.
I'm just curious, what is your main objection to just waiting for the SEC? I mean, it doesn't strike me, if you agree that, you know, that the time period isn't that significant, you know, 180 days isn't going to fundamentally change much of anything. Why not just wait for the SEC to weigh in and say, hey, here's, you know, I have a great deal of respect for Senator Kennedy, but, you know, he's not all-knowing on SPACs, just like none of us in this committee are. So I think having the SEC weigh in over a short period of time just feels like the appropriate move.
First of all, it's not like we get the study in 180 days. This bill goes to the Senate, where it languishes, et cetera. I have grown old in this room waiting for studies. And
I can appreciate
I've grown, I would say I've grown bald in this room waiting for studies almost completely. And I think that moving forward with a bill that is merely a disclosure bill is not the height of, is the appropriate thing for us to do, given that we're seeing so many SPACs out there without the appropriate disclosure. They're going forward every day. I yield back.
Fair. I guess we will agree to disagree. I think the 180 days is absolutely appropriate. I thank Mr. Huizenga for his amendment. It's the right way to go about this, and with that, I yield back.
Thank you, Mr. Davidson. The gentleman from Ohio is recognized for 5 minutes to strike the last word.
Thank you, Madam Speaker. I move to strike the last word. You know, the study bill has been highlighted, version of it is really the same bill with a ready, aim, fire approach versus ready, fire, aim approach. And frankly, for a government agency to take a little bit of time to aim it more correctly is probably what would end up happening anyway. So one of the bigger things that unfortunately this bill does is it promotes, sadly, the antiquated and arbitrary concept that wealthier individuals retain greater autonomy in their financial investments. It reaffirms the accredited investor rule. We should be going the other way and providing more democratic access to capital. Frankly, part of why SPACs have become so popular is because access to our capital markets has become more restrictive than we would like. So it's highlighting the need to improve upon the regulatory framework that we have. People are perhaps using arbitrage. Maybe this disclosure regime would highlight that. But fundamentally, too few people have access to participate in our capital markets. We need to discuss how we can help everyday investors gain exposure to early-stage investment opportunities. SPACs offer these people the opportunity to gain this kind of exposure in public markets, and disclosure is fine. However, we shouldn't just focus on public markets, but private equity markets. And that's why I introduced the Accredited Investor Self-Certification Act. My bill would allow for individuals who did not meet the current accredited investor threshold to self-certify that they understand the risks of investing in private issuers so that they may then invest in the private market. Put more simply, my bill allows investors to choose how they invest their own money in the private market. We should welcome this rather than look for additional ways to leverage the accredited investor bill rule as this does. So my hope is that the SEC would look at the impact of limiting and reaffirming the accredited investor rule. If it's your money, why should you be deprived of opportunities to invest that money? Some say it's about investor protection, but a more honest description would call it investor deprivation. Frankly, it protects deal flow for people that are already wealthy. So we must embrace the democratization of capital markets, and amendments that do that, even if only with the hope that the study would produce something fruitful, are worth supporting. And for that, I support Mr. Huizenga.
Will the gentleman yield? If your concern is that this bill somehow doesn't apply to accredited investors, if you'll support the bill, I'll make sure that before it goes to the floor, it applies to accredited investors as well, so that everybody's on the same.
I think you're going the wrong way, Mr. Sherman. I want to eliminate the accredited investor.
I want disclosures, and
so as long as it's disclosed, you'll allow people to invest their own money anywhere. I think we have the makings of a great bill.
Let's. I yield back.
Okay.
But I did make the offer.
Need time? Okay, I yield the balance of my time.
Thank you. Now, I recognize myself for 5 minutes. The problem with SPACs are clear and well documented. For example, we know that SPAC disclosure is opaque or non-existent. Mr. Gonzalez just described his own concerns with the transparency of SPACs. As I mentioned before, transparency is good for our capital markets because it is good for investors, analysts, insurers, and other stakeholders. The data provided through our own disclosure requirements would benefit all stakeholders. There's a lot of data on SPACs today, and several prominent studies published in peer-reviewed journals. SPACs have been around since 1990s. Today, SPAC sponsors are paid a 20% promote, a payment structure similar to the 20% performance fee charged by private equity. The 20% promote reduces the cash per share for investors and is cost imposed onto investors that are often in the dark when to redeem. SPAC underwriters are also paid in excess of 6% of the deal, and hedge funds are also compensated amply. Sponsors are incentivized to do any deal, good or bad, as they make several times more than their initial investment, which is often at the expense, again, of retail investors. There's an example of a billionaire casino owner who raised money from investors through a SPAC and merged the SPAC with another one of his companies and paid down the debt of the second company with the proceeds he had raised from SPAC investors. This kind of self-dealing is a huge problem, and it happens because there is a lack of disclosure. By not taking action today and instead striking the rulemaking authority and requiring the SEC to study the issue, the harm posed to investors will continue. Retail investors are investing in SPACs, and a report issued by Bank of America in February of this year showed that over 40% of trades in SPACs are by retail investors. What we are doing here today would empower these and other investors with information about how sophisticated and deep-pocketed financial players' practices are being paid and how they could affect the retail investors' bottom line. For these reasons, I oppose this amendment, and I yield back the balance of my time. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment say aye. Those opposed, no.
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 In the opinion of the chair, the noes have it, and the amendment is not agreed to.
Madam Chair, request a recorded vote.
A recorded vote has been requested pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? Not. This is 5993. It's the same one. If there are no further amendments, without objections, the previous question is ordered on H.R. 5913 and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, I now call up H.R. 2311, the Credit Union Governance Modernization Act of 2021. The clerk will report the bill.
H.R. 2311, a bill to amend the Federal Credit Union Act to modernize certain processes regarding expulsion of credit union members.
Without objection, the first reading of H.R. 2311 is dispensed with. The gentleman from Minnesota, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
An amendment in the nature of a substitute to H.R. 2311, offered by Mr. Emmer of Minnesota. Strike all after the enacting
Without
clause.
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Minnesota, Mr. Emmer, for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. I'm going to start by asking for unanimous consent to submit the following to the record. For the record, Affinity Plus Federal Credit Union testimony, Highway Federal Credit Union testimony stories, stories from the Credit Union from Tennessee, stories or testimony from the Credit Union from South Dakota, similar from SinFed Credit Union in Ohio, America First Credit Union in Alabama, Apple Credit Union in Virginia, and the California Credit Union League. Is that?
Gentleman yields back.
I asked for unanimous consent to submit these for the record.
Without objection, such is the order.
Thank you. Again, thank you, Chair Waters. I work with my friend from Colorado, Chair Perlmutter, on the bill, the Credit Union Governance Modernization Act, and I think we can all agree that Americans should have access to safe and reliable financial services. To ensure protection, federal credit unions must have a streamlined process for removing dangerous members from the credit union. Up until now, we have failed in providing this for our federal credit unions and for our constituents because the current law is actually outdated and ineffective. I've heard from credit unions all over the country, as referenced by what was just submitted for the record, detailing case after case of dealing with credit union members who make credit union employees and members feel unsafe. For example, Highway Federal Credit Union in my home state of Minnesota dealt with a member who repeatedly harassed and stalked female employees and eventually threatened the employees with a knife. On a separate occasion, one member walked up to a teller and threatened to start killing people in the credit union. These are just two of several incidents Highway Federal Credit Union has experienced and just two of countless cases from the credit unions across the country that have reached out to our office. My bill, the Credit Union Governance Modernization Act, keeps credit union members and employees safe by creating a framework for federal credit unions to swiftly remove a member for cause, whether members are disruptive, dangerous, or abusive, whether they commit fraud, attempted fraud, or other illegal conduct, or whether they violate the membership agreement of the credit union. We must update ineffective laws. We must prioritize a financial system that keeps Americans safe. The bill has bipartisan support, and I've got to add Chair Perlmutter and his team have been absolutely fantastic, great partner throughout the entire process. It's with their help. It's also got the support of the Credit Union National Association, the National Association of Federally Insured Credit Unions, and the Consumer Advocacy Group, Public Citizen. Madam Chair, I ask my colleagues on the committee today to support and advance the Credit Union Governance Modernization Act so we can ensure our financial system protects those it serves. And I thank you and yield back the balance of my time.
Thank you. The gentleman from Colorado, Mr. Perlmutter, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I'm proud to co-sponsor H.R. 2311. I want to thank the gentleman from Minnesota for allowing us to work with him and his office on the Credit Union Governance Modernization Act of 2021. Bipartisan bill will improve the federal credit union charter and make credit unions safer for both their employees and their members. Under current law for federal credit unions, a full vote of the credit union is required to remove a member, even for cases in which the member is engaged in fraud or other illegal activity or has threatened or harassed credit union employees or other members. These cases are rare, but under current law, it is difficult for the credit union to expel a member, which may subject employees and other members to dangerous situations. In one case from a credit union in Tennessee, the credit union was robbed by two of its own members who retained their membership for years before robbing another credit union. In other cases, credit union staff have been threatened, harassed with racial slurs, or stalked after hours. Credit unions should have the ability to protect their staff and members more easily. This legislation would give federal credit unions the option to expel a member in limited circumstances under a new policy adopted by the National Credit Union Administration. The new policy would include procedures for the expulsion of and reinstatement of a member under certain circumstances while ensuring fairness and due process for the member in question. I want to applaud my friend from Minnesota, Mr. Emmer, on his work on this issue and thank him for his willingness to work with me and my staff on including strong consumer protections and technical improvements to the bill. This legislation is, as he said, supported by Public Citizen, the Mountain West Credit Union Association, the Credit Union National Association, and the National Association for Federally Insured Credit Unions. I urge my colleagues to support this bill to ensure credit unions can protect their employees and their members. With that, Madam Chair, I yield back.
Thank you. The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes to strike the last word.
Thank you very much, Chair Lady, and I do move to strike the last word. First of all, I want to congratulate my good friends, Mr. Emmer and Mr. Perlmutter, Perlmutter for their long-standing support and commitment to our nation's credit unions. House Resolution 2311 governing the expulsion as well as the reinstatement of federal credit union members. It's supported by, as was mentioned, the Credit Union National Association, NCUA, the National Association of Federal Insured Credit Unions, the NAFCU. It's a very good bill for self-governance of our federal credit unions. And also, Ms. Waters, I'm particularly proud of this bill, and I'm proud that you included it because the benefits of this bill, while it helps our financial system, it will also be very helpful and bring to Black-owned and operated credit unions in my state of Georgia and across the nation tremendous help. Because you see, Black-owned credit unions are very serious and they're very intentional about helping the Black community. Most of our Black credit unions are what we call community development financial institutions, which means they bring valuable financial services to underserved and low to moderate income areas, and ensuring that they have the ability to address illegal activity, modernize internal operations is paramount to the continued success of serving some of our most vulnerable communities. And I really have faith that this bipartisan bill will ensure that all of our Main Street credit unions have the necessary tools to succeed. And certainly I urge all my colleagues to vote for this very important bill. Finally, I want to say that credit unions, I've worked with them as you have, Madam Chair, later, and they provide the glue for our financial system, particularly for the lower income and moderate income families in this nation. So I'm very delighted to work with you again. I commend our bipartisan partners, Mr. Perlmutter, as well as Mr. Emmer. Job well done.
Thank you very much. Is there further discussion of our amendment to H.R. 2311?
Madam Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I want to thank my friend from Minnesota, Mr. Emmer, and my friend from Colorado, Mr. Perlmutter, for introducing the Credit Union Modernization Act. Their bill would streamline the process for expelling a member without removing due process rights. This is necessary both for practical efficiency reasons and for safety reasons. Under current law, a member can only be expelled from a credit union through a 2/3 vote by the entire membership with the member in question present. These types of membership-wide meetings typically only happen annually, so if there's an urgent need to expel a member, this could be problematic, and oftentimes these members need to be expelled because they potentially could be a physically violent threat to other members of credit union staff. Mr. Emmer's bill and Mr. Perlmutter's bill would allow for a member who is engaged in egregious, dangerous, or illegal conduct to be expelled from the credit union through a 2/3 vote from the board of directors. The member could request a hearing from the board of directors, and if they were expelled, they could be reinstated through a 2/3 vote by the full membership of the credit union. A credit union in my district informed me of a situation where a member made derogatory comments to several female employees of the credit union and then acted very aggressively toward the credit union's contact team. This was escalated to every level of the credit union with documentation of each interaction with the member being documented, a total of 9 employees doing so. Because of the links that credit unions are required to go to in order to expel a member, staff at this credit union have had to repeatedly deal with this type of derogatory behavior. This bill is a no-brainer, and I urge all of my colleagues to support its adoption. Thank you, Madam Chair. I yield back.
Thank you, Mr. Timmons. Is there further discussion of our amendment to H.R. 2311? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Aye. Those opposed, no. Okay. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 2311 as amended to be reported favorably to the House. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it. And H.R. 2311 is agreed to. The committee will now stand in recess, subject to the call of the chair. We will reconvene at 2 p.m., and it will take votes on all matters pending before the committee. Members are reminded that we have a long vote series on the floor at approximately 3 p.m. And in order to finish before then, members will please be timely in their arrival to the hearing room or virtual platform so that we can begin voting in a timely manner. The committee stands in recess. Thank you. I want to acknowledge that the quorum is present.
Yeah.
Oh, no.
I'll sit next to you.
I'm gonna get my guns.
Quorum is present. The committee will come to order. Before we begin, I want to review the process. We will use for recording votes to ensure that all members can be recorded properly. The clerk will call a member's name twice if a response is not heard the first time. Further, at the end of the roll, the clerk will call the names of any members whose votes were not recorded. Therefore, any members who are unsure if their vote was recorded should refrain from seeking recognition and allow the clerk to continue calling the roll. Members on the platform are reminded that the majority and minority clerks will be verifying that members are both visible and audible in order for their vote to be counted. The chair will now call for the votes that were postponed on H.R. 5910. Without objection, the committee will consider the amendments offered by Mr. Huizinga and Mr. Stile as en bloc. The question now occurs on the amendments on en bloc H.R. 5910. The clerk will call the roll.
Mrs. Maloney.
No.
Mrs. Maloney votes no. Ms. Velasquez.
No.
Ms. Velasquez votes no. Mr. Sherman.
No.
Mr. Sherman votes no. Mr. Meeks. Mr. Meeks. Mr. Scott.
Mrs. Scott votes no.
Mr. Scott votes no. Mr. Green.
Green votes nay.
Mr. Green votes no. Mr. Cleaver. Mr. Cleaver.
No.
Mr. Cleaver votes no. Mr. Perlmutter.
Perlmutter votes no.
Mr. Perlmutter votes no. Mr. Himes.
Himes votes no.
Mr. Himes votes no. Mr. Foster.
Foster votes no.
Mr. Foster votes no. Mrs. Beatty.
Real sorry about that. What you just saw me do.
Mrs. Beatty. Mr. Vargas. Mr. Vargas votes no. Mr. Geheimer.
Gottheimer votes no.
Mr. Geheimer votes no. Mr. Gonzalez of Texas. Mr. Gonzalez of Texas. Mr. Lawson.
No.
Mr. Lawson votes no. Mr. San Nicolas.
Mr. Nicholas votes no.
Mr. San Nicolas votes no. Ms. Axney.
No.
Ms. Axney votes no. Mr. Caston. Mr. Caston.
Caston votes no.
Mr. Caston votes no. Ms. Presley.
Presley votes no.
Ms. Presley votes no. Mr. Torres. Torres votes no. Mr. Torres votes no. Mr. Lynch? Mr. Lynch votes no. Ms. Adams?
Adams votes no.
Ms. Adams votes no. Ms. Tlaib?
Apologize.
Talib votes no.
Ms. Tlaib votes no. Ms. Dean?
No.
Ms. Dean votes no. Ms. Ocasio-Cortez?
No.
Ms. Ocasio-Cortez votes no. Mr. Garcia of Illinois?
Garcia votes no.
Mr. Garcia votes no. Ms. Garcia of Texas?
Garcia of Texas votes no.
Ms. Garcia votes no. Ms. Williams of Georgia?
Williams of Georgia votes no.
Ms. Williams votes no. Mr. Auchincloss?
Auchincloss votes no.
Mr. Auchincloss votes no. Mr. McHenry?
Aye.
Mr. McHenry votes aye. Mrs. Wagner?
Wagner, aye.
Mrs. Wagner votes aye. Mr. Lucas? Mr. Lucas votes aye. Mr. Sessions?
Sessions, aye.
Mr. Sessions votes aye. Mr. Posey? Mr. Posey votes aye. Mr. Lukemeyer? Mr. Lukemeyer votes aye. Mr. Huizinga? Mr. Huizinga votes aye. Mr. Barr? Mr. Barr votes aye. Mr. Williams of Texas? Mr. Williams votes aye. Mr. Hill?
Hill, yes.
Mr. Hill votes aye. Mr. Emmer?
Yes.
Mr. Emmer votes aye. Mr. Zeldin?
Aye.
Mr. Zeldin votes aye. Mr. Loudermilk? Mr. Loudermilk? Mr. Mooney? Mr. Mooney? Mr. Davidson?
Davidson votes aye.
Mr. Davidson votes aye. Mr. Budd?
Aye.
Mr. Budd votes aye. Mr. Kustoff?
Aye.
Mr. Kustoff votes aye. Mr. Hollingsworth? Mr. Hollingsworth votes aye. Mr. Gonzalez of Ohio? Mr. Gonzalez votes aye. Mr. Rose?
Rose votes yes.
Mr. Rose votes aye. Mr. Stile?
Style votes aye.
Mr. Stile votes aye. Mr. Gooden?
Gooden votes aye.
Mr. Gooden votes aye. Mr. Timmons?
Timmons votes aye.
Mr. Timmons votes aye. Mr. Taylor? Mr. Taylor votes aye. Madam Chairwoman? Madam Chairwoman votes no. I will now go over the members that were missed in the original order. Mr. Meeks? Mrs. Beatty? Mr. Gonzalez of Texas? Mr. Loudermilk? Mr. Mooney? And that concludes that vote, Madam Chairwoman.
Based on the roll call, it appears all members who are present Based on the roll call, it appears all members who are present have voted. Does any member wish to change his or her vote? If not, the clerk will report.
With that vote, Madam Chair, we have 27 ayes and 22 noes.
A majority having voted against the amendments are not agreed to. The question now occurs on adoption of the amendment in the nature of a substitute offered by Mr. San Nicolas. All those in favor say aye.
Madam Chair.
Yes.
I'm sorry. For that vote, we have 27 noes and 22 ayes.
Yes. Yes, that's what I have. Thank you. Let me just make sure that we go back. A majority haven't voted against the amendments. The amendments are not agreed to. The question now occurs on adoption of the amendment in the nature of a substitute offered by Mr. San Nicolas. All those in favor say aye. Those,
Aye.
those opposed, no.
No.
In the opinion of the chair, the ayes have it. The ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5910 as amended to be reported favorably to the House. All those in favor?
Madam Chair,
Yes,
I'd like to ask for a recorded vote.
I can't hear you.
Can I ask for a recorded vote on this, please?
Okay. Hold it. The vote has been requested. The clerk will call the roll.
Mrs. Maloney.
Aye.
Mrs. Maloney votes aye. Ms. Velasquez. Ms. Velasquez votes aye. Mr. Sherman.
Aye.
Mr. Sherman votes aye. Mr. Meeks. Mr. Meeks. Mr. Scott.
Mr. Scott votes aye.
Mr. Scott votes aye. Mr. Green.
Green votes yea.
Mr. Green votes aye. Mr. Cleaver. Mr. Cleaver.
Aye.
Mr. Cleaver votes aye. Mr. Perlmutter.
Man, that was one of the most painful ayes I ever heard. Aye.
Mr. Perlmutter votes aye. Mr. Himes.
Yes. No. Yep. Himes votes yes.
Mr. Himes votes aye. Mr. Foster.
Foster, yes.
Mr. Foster votes aye. Mrs. Beatty.
Hello. Hello. No,
Mrs. Beatty.
I think I've had 3 more votes to cast remotely, so I.
Mr. Vargas. Mr. Vargas votes aye. Mr. Gottheimer.
Gottheimer votes aye.
Mr. Gottheimer votes aye. Mr. Gonzalez of Texas.
Aye.
Mr. Gonzalez of Texas. Mr. Lawson. Mr. Lawson. Mr. San Nicolas.
St. Nicholas votes yes.
Mr. San Nicolas votes aye. Ms. Axney.
Yes.
Ms. Axney votes aye. Mr. Caston.
Caston votes aye.
Mr. Caston votes aye. Ms. Presley.
Presley votes aye.
Ms. Presley votes aye. Mr. Torres.
Torres votes aye.
Mr. Torres votes aye. Mr. Lynch. Mr. Lynch votes aye. Ms. Adams.
Adams votes aye.
Ms. Adams votes aye. Ms. Talib.
Talib votes aye.
Ms. Talib votes aye. Ms. Dean.
Aye.
Ms. Dean votes aye. Ms. Ocasio-Cortez. Ms. Ocasio-Cortez. Mr. Garcia of Illinois.
Garcia of Illinois is yes.
Mr. Garcia votes aye. Ms. Garcia of Texas.
Garcia of Texas votes aye.
Ms. Garcia votes aye. Ms. Williams of Georgia.
Williams of Georgia votes aye.
Ms. Williams votes aye. Mr. Auchincloss.
Mr. Clerk, can I have clarification on the bill number?
This is the final passage of 5910.
Auchincloss votes no.
Mr. Auchincloss votes no. Mr. McHenry. Mr. McHenry votes no. Mrs. Wagner.
Hello.
Mrs. Wagner votes no. Mr. Lucas. Mr. Lucas votes no. Mr. Sessions.
Sessions votes no.
Mr. Sessions votes no. Mr. Posey. Mr. Posey votes no. Mr. Lukemeyer. Mr. Lukemeyer votes no. Mr. Huizenga. Mr. Huizenga votes no. Mr. Barr. Mr. Barr votes no. Mr. Williams of Texas. Mr. Williams votes no. Mr. Hill. Mr. Hill votes no. Mr. Emmer.
No.
Mr. Emmer votes no. Mr. Zeldin.
No.
Mr. Zeldin votes no. Mr. Loudermilk. Mr. Loudermilk. Mr. Mooney. Mr. Mooney. Mr. Davidson.
No.
Mr. Davidson votes no. Mr. Budd.
No.
Mr. Budd votes no. Mr. Kustoff.
No.
Mr. Kustoff votes no. Mr. Hollingsworth. Mr. Hollingsworth votes no. Mr. Gonzalez of Ohio. Mr. Gonzalez votes no. Mr. Rose.
Rose votes no.
Mr. Rose votes no. Mr. Stile.
Style votes no.
Mr. Stile votes no. Mr. Gooden.
Gooden votes no.
Mr. Gooden votes no. Mr. Timmons.
Timmons votes no.
Mr. Timmons votes no. Mr. Taylor. Mr. Taylor votes no. Madam Chairwoman. Madam Chairwoman votes aye. I will now go over the members that were missed in the previous order. Mr. Meeks.
Aye.
Mr. Meeks votes aye. Mr. Gonzalez of Texas. Mrs. Beatty. Mr. Lawson.
Aye.
Mr. Lawson votes aye. Ms. Ocasio-Cortez.
Aye.
Ms. Ocasio-Cortez votes aye. Mr. Loudermilk. Mr. Mooney. And that concludes that vote, Madam Chairwoman.
Based on the roll call, it appears all members who are present have voted. Does any member wish to change his or her vote? If not, the clerk will report.
With that vote, Madam Chairwoman, we have 27 ayes and 23 noes.
A majority having voted in favor, H.R. 5910 as amended is reported favorably to the House. The chair will now call for the votes that were postponed on H.R. 2620. The question now occurs on ordering H.R. 2620 as amended to be reported favorably to the House. The clerk will call the roll.
Mrs. Maloney.
Maloney votes aye.
Ms. Maloney votes aye. Ms. Velasquez.
Aye.
Ms. Velasquez votes aye. Mr. Sherman. Mr. Sherman.
This is Sherman here. First, I would ask staff to allow me to log on my iPad, and second, I would vote aye.
Mr. Sherman votes aye. Mr. Meeks.
Aye.
Mr. Meeks votes aye. Mr. Scott. Mr. Scott votes aye. Mr. Green.
Yay.
Mr. Green votes aye. Mr. Cleaver.
Aye.
Mr. Cleaver votes aye. Mr. Perlmutter.
That was a much stronger aye, and I vote aye.
Mr. Perlmutter votes aye. Mr. Himes.
Himes votes yes.
Mr. Himes votes aye. Mr. Foster.
Foster, aye.
Mr. Foster votes aye. Mrs. Beatty. Mrs. Beatty. Mr. Vargas. Mr. Vargas votes aye. Mr. Gottheimer.
Gottheimer votes aye.
Mr. Gottheimer votes aye. Mr. Gonzalez of Texas. Mr. Gonzalez of Texas. Mr. Lawson.
Aye.
Mr. Lawson votes aye. Mr. San Nicolas.
Just if you could focus on
Mr.
that.
San Nicolas. Ms. Axney. Ms.
Aye.
Axney votes aye. Mr. Caston.
Caston votes aye.
Mr. Caston votes aye. Ms. Presley.
Presley votes aye.
Ms. Presley votes aye. Mr. Torres.
Torres votes aye.
Mr. Torres votes aye. Mr. Lynch. Mr. Lynch votes aye. Ms. Adams.
Adams votes aye.
Ms. Adams votes aye. Ms. Tlaib.
Talib votes yes.
Ms. Tlaib votes aye. Ms. Dean.
Aye.
Ms. Dean votes aye. Ms. Ocasio-Cortez. Ms. Ocasio-Cortez.
Aye.
Ms. Ocasio-Cortez votes aye. Mr. Garcia of Illinois.
Aye.
Mr. Garcia votes aye. Ms. Garcia of Texas.
Garcia of Texas votes aye.
Ms. Garcia votes aye. Ms. Williams of Georgia.
Williams of Georgia votes aye.
Ms. Williams votes aye. Mr. Auchincloss.
Auchincloss, aye.
Mr. Auchincloss votes aye. Mr. McHenry. Mr. McHenry votes no. Mrs. Wagner. Ms. Wagner votes no. Mr. Lucas. Mr. Lucas votes no. Mr. Sessions.
Sessions,
Mr. Sessions votes no. Mr. Posey. Mr. Posey votes no. Mr. Lukemeyer. Mr. Lukemeyer votes no. Mr. Huizinga. Mr. Huizinga votes no. Mr. Barr. Mr. Barr votes no. Mr. Williams of Texas. Mr. Williams votes no. Mr. Hill. Mr. Hill votes no. Mr. Emmer.
No.
Mr. Emmer votes no. Mr. Zeldin.
No.
Mr. Zeldin votes no. Mr. Loudermilk. Mr. Loudermilk. Mr. Mooney.
No.
Mr. Mooney votes no. Mr. Davidson.
No.
Mr. Davidson votes no. Mr. Budd. Mr. Budd votes no. Mr. Kustoff.
No.
Mr. Kustoff votes no. Mr. Hollingsworth. Mr. Hollingsworth votes no. Mr. Gonzalez of Ohio. Mr. Gonzalez votes no. Mr. Rose.
Rose votes no.
Mr. Rose votes no. Mr. Stile.
Style votes no.
Mr. Stile votes no. Mr. Gooden.
Gooden votes no.
Mr. Gooden votes no. Mr. Timmons.
Timmons votes no.
Mr. Timmons votes no. Mr. Taylor. Mr. Taylor votes no. Madam Chairwoman. Madam Chairwoman votes aye. I will now go over the members that were missed in the previous order, starting with Mrs. Beatty. Mr. Gonzalez of Texas. Mr. San Nicolas. Mr. Loudermilk. And that concludes that vote, Madam Chairwoman.
Based on the roll call, it appears all members who are present have voted. Does any member wish to change his or her vote? If not, the clerk will report.
With that vote, Madam Chairwoman, we have 27 ayes and 23 noes.
A majority having voted in favor, H.R. 2620, as amended, is reported favorably to the House. The chair will now call for the votes that were postponed on H.R. 5913. The question now occurs on the Huizinga Amendment to H.R. 5913. The clerk will call the roll.
Mrs. Maloney.
Maloney votes no.
Mrs. Maloney votes no. Ms. Velasquez.
No.
Ms. Velasquez votes no. Mr. Sherman. Mr. Sherman. Mr. Sherman. Mr. Meeks.
No.
Mr. Meeks votes no. Mr. Scott.
Mr. Scott votes no.
Mr. Scott votes no. Mr. Green.
Green votes nay.
Mr. Green votes no. Mr. Cleaver.
No.
Mr. Cleaver votes no.
No.
Mr. Perlmutter.
Perlmutter votes no.
Mr. Perlmutter votes no. Mr. Himes.
Himes votes no.
Mr. Himes votes no. Mr. Foster.
Foster, no.
Mr. Foster votes no. Mrs. Beatty. Mrs. Beatty. Mr. Vargas. Mr. Vargas votes no. Mr. Geheimer.
Gottheimer votes no.
Mr. Geheimer votes no. Mr. Gonzalez of Texas. Mr. Gonzalez of Texas. Mr. Lawson.
No.
Mr. Lawson votes no. Mr. San Nicolas. Mr. San Nicolas. Ms. Axton.
Axney votes no.
Ms. Axton votes no. Mr. Caston.
Caston votes no.
Mr. Caston votes no. Ms. Presley.
Presley votes no.
Ms. Presley votes no. Mr. Torres.
Torres votes
Mr. Torres votes no. Mr. Lynch. Mr. Lynch votes no. Ms. Adams.
Adams votes no.
Ms. Adams votes no. Ms. Talib.
Talib votes no.
Ms. Talib votes no. Ms. Dean.
No.
Ms. Dean votes no. Ms. Ocasio-Cortez.
No.
Ms. Ocasio-Cortez votes no. Mr. Garcia of Illinois.
Garcia votes no.
Mr. Garcia votes no. Ms. Garcia of Texas.
Garcia of Texas votes no.
Ms. Garcia votes no. Ms. Williams of Georgia.
Williams of Georgia votes no.
Ms. Williams votes no. Mr. Auchincloss.
Claus, no.
Mr. Auchincloss votes no. Mr. McHenry. Mr. McHenry votes aye. Mrs. Wagner. Mrs. Wagner votes aye. Mr. Lucas. Mr. Lucas votes aye. Mr. Sessions.
Sessions votes aye.
Mr. Sessions votes aye. Mr. Posey. Mr. Posey votes aye. Mr. Lukemeyer. Mr. Lukemeyer votes aye. Mr. Huizinga. Mr. Huizinga votes aye. Mr. Barr. Mr. Barr votes aye. Mr. Williams of Texas. Mr. Williams votes aye. Mr. Hill. Mr. Hill votes aye. Mr. Emmer.
Yes.
Mr. Emmer votes aye. Mr. Zeldin.
Aye.
Mr. Zeldin votes aye. Mr. Loudermilk. Mr. Loudermilk. Mr. Mooney.
Aye.
Mr. Mooney votes aye. Mr. Davidson.
Aye.
Mr. Davidson votes aye. Mr. Budd.
Aye.
Mr. Budd votes aye. Mr. Kustoff.
Aye.
Mr. Kustoff votes aye. Mr. Hollingsworth. Mr. Hollingsworth votes aye. Mr. Gonzalez of Ohio. Mr. Gonzalez votes aye. Mr. Rose.
Rose votes yes.
Mr. Rose votes aye. Mr. Stile.
Style votes aye.
Mr. Stile votes aye. Mr. Gooden.
Gooden votes
Mr. Gooden votes aye. Mr. Timmons.
Timmons votes aye.
Mr. Timmons votes aye. Mr. Taylor. Mr. Taylor votes aye. Madam Chairwoman. Madam Chairwoman votes no. And I will go over the members that were missed in the previous order. Mr. Sherman. Mrs. Beatty. Mr. Gonzalez of Texas. Mr. San Nicolas.
Mr. Nicholas votes no.
Mr. San Nicolas votes no. Mr. Loudermilk. And that concludes that vote, Madam Chairwoman.
Based on the roll call, it appears all members who are present have voted. Does any member wish to change his or her vote? If not,
Hello.
Oh, God.
Mr. Sherman, are you on?
Can't figure out the icon.
If not, the clerk will report.
Good call.
With that vote, Madam Chairwoman, we have 23 ayes and 27 noes.
A majority having voted against the amendment is not agreed to. The question now occurs on adoption of the amendment in the nature of a substitute offered by Mr. Sherman. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it. The ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5913 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes
And
have
ask
it.
for a
And
recorded
the
vote.
ayes have it. and
Ask for a recorded
H-
vote.
Recorded vote has been requested. The clerk will call the roll.
Mrs. Maloney.
Maloney votes aye.
Mrs. Maloney votes aye.
Done?
Ms. Velasquez. Aye. Ms. Velasquez votes aye. Mr. Sherman.
Aye.
Mr. Sherman votes aye. Mr. Meeks.
Aye.
Mr. Meeks votes aye. Mr. Scott. Aye. Mr. Scott votes aye. Mr. Green.
Green votes yea.
Mr. Green votes aye. Mr. Cleaver.
Aye.
Mr. Cleaver votes aye.
Aye.
Mr. Perlmutter.
Perlmutter votes aye.
Mr. Perlmutter votes aye. Mr. Himes.
Himes votes
Mr.
aye.
Himes votes aye. Mr. Foster.
Foster, aye.
Mr. Foster votes aye. Mrs. Beatty. Mrs. Beatty. Mr. Vargas. Mr. Vargas votes aye. Mr. Gottheimer. Mr. Gottheimer votes aye. Mr. Gonzalez of Texas. I believe you are muted, Mr.
Gonzalez of Texas votes aye.
Mr. Gonzalez votes aye. Mr. Lawson. Mr. Lawson. Mr. Lawson votes aye. Mr. San Nicolas.
Mr. Nicholas votes
Mr.
yes.
San Nicolas votes aye. Ms. Axney. Ms.
Aye.
Axney votes aye. Mr. Caston. Mr. Caston.
Caston votes aye.
Mr. Caston votes aye. Ms. Presley.
Presley votes aye.
Ms. Presley votes aye. Mr. Torres. Mr. Torres. Mr. Torres votes aye. Mr. Lynch. Mr. Lynch votes aye. Ms. Adams.
Adams votes aye.
Ms. Adams votes aye. Ms. Tlaib.
Lee votes aye.
Ms. Tlaib votes aye. Ms. Dean.
Aye.
Ms. Dean votes aye. Ms. Ocasio-Cortez. Ms. Ocasio-Cortez votes aye. Mr. Garcia of Illinois.
Garcia votes aye.
Mr. Garcia votes aye. Ms. Garcia of Texas.
Garcia of Texas votes aye.
Ms. Garcia votes aye. Ms. Williams of Georgia.
Williams of Georgia votes aye.
Ms. Williams votes aye. Mr. Auchincloss.
Auchincloss votes aye.
Mr. Auchincloss votes aye. Mr. McHenry. Mr. McHenry votes no. Mrs. Wagner. Mrs. Wagner votes no. Mr. Lucas. Mr. Lucas votes no. Mr. Sessions.
Sessions, no.
Mr. Sessions votes no. Mr. Posey. Mr. Posey votes no. Mr. Lukemeyer. Mr. Lukemeyer votes no. Mr. Huizinga. Mr. Huizinga votes no. Mr. Barr. Mr. Barr votes no. Mr. Williams of Texas. No. Mr. Williams votes no. Mr. Hill.
No.
Mr. Hill votes no. Mr. Emmer.
No.
Mr. Emmer votes no. Mr. Zeldin.
No.
Mr. Zeldin votes no. Mr. Loudermilk. Mr. Loudermilk. Mr. Mooney.
No.
Mr. Mooney votes no. Mr. Davidson.
No.
Mr. Davidson votes no. Mr. Budd.
No.
Mr. Budd votes no. Mr. Kustoff.
No.
Mr. Kustoff votes no. Mr. Hollingsworth. Mr. Hollingsworth votes no. Mr. Gonzalez of Ohio. Mr. Gonzalez votes no. Mr. Rose.
Rose votes no.
Mr. Rose votes no. Mr. Style.
Style votes no.
Mr. Style votes no. Mr. Gooden?
Gooden votes no.
Mr. Gooden votes no. Mr. Timmons?
Timmons votes no.
Mr. Timmons votes no. Mr. Taylor? Mr. Taylor votes no. Madam Chairwoman? Madam Chairwoman votes aye. I will now go over the members that were missed in the previous order. Mrs. Beatty? Mr. Loudermilk? That concludes that vote, Madam Chairwoman.
Based on the roll call, it appears all members who are present have voted. Does any member wish to change his or her vote? If not, the clerk will report.
With that vote, Madam Chairwoman, we have 29 ayes and 23 noes.
A majority having voted in favor, H.R. 5913, as amended, is reported favorably to the House. This concludes the matters pending before the committee. Without objection, staff are authorized to make technical and conforming amendments to the measures under consideration. This concludes the markup. I thank all the members, and this meeting is adjourned.